re-welcome you or reintroduce you to the Financial Freedom Accelerator, the ultimate way to learn the concepts of stock market trading and investing like an expert alongside your career, where you learn the right steps towards a healthy financial future. And that is exactly what we want, right? A healthy financial future. Because God forbid, we know how many mistakes we are making in our day to day finances. So, as I said, I think all of you can agree with me on that, right? When I said everybody is making financial mistakes, we're not really prioritizing what we should, right? But yes, that is what we are trying to tackle in the 4 days of the FFA. Just to give you a reality check, just to give you some clarity on what should be the ideal way. As practicing professionals, I can tell you, what is the ideal way to go about planning your personal finance and everything. And that is what brings me now to the day two, after yesterday, of the Financial Freedom Accelerator. And we are going to go a little more into detail as to what we already started with the foundations yesterday. We're going to move into a little more detail today. And before I take you through everything, but first, let me take you through the rules once again. Okay. Let me take you through the rules once again. First and foremost, very, very important, I want all of you to empty the cup. No prior knowledge, as I said, is required from your end. Whether you are a fresher into the markets, you have not heard. I have tried to simplify it for you yesterday. I try to bring down the barrier level. I try to, make it as accessible to you as possible. And I think that is something all of you appreciated and you were able to learn. That is what we're going to do across the next 3 days as well. So just whatever you think you know already, just keep it in the back seat. Try to look at it from a fresh lens, because what is, worse than having no knowledge is having half baked knowledge, right? I think all of you can agree to this. Having half baked knowledge, because that is a very precarious position. You think you know, but you know that it is not enough, and then you take actions based on half baked knowledge. So again, empty the cup. Second thing, please, as you guys know, we try to give you as much value per minute as possible in these 3 hours that we have over the next 4 days, or the entirety of the 4 days. So please do the work and take notes, because you know that we are not going to give away any recordings. So please, please, please pay attention. Whatever you think is important, whatever you think you need to note it down, make a note of it, and please participate and be active. Don't just watch, learn across the next 3 hours. Okay, got it? Now, again, before I just wanted to tell you something. There might be places where I see a lot of text. So can you revise this particular concept? What were the steps yesterday? This and that. Don't worry. At the end of day four, I'll be giving you an entire PDF, a 70-page PDF approximately, covering everything step by step that we will be discussing across the 4 days. So if you think you are unable to recollect any of the steps in chronological order, don't worry, we have you covered. At the end of day four, I'll be sharing you a detailed, a voluminous PDF with all the steps noted down, everything that we'll be going to cover in the 4 days at all, right? But still, I want to tell you something. Anything you feel which is important, please make it a point that you make a note of it yourself. Third, goes without saying, participate, right? It's the most important thing you can do. Be the most active you have ever been on a Zoom call. The more energy, the more the learning. Why is that so? Because if you are actually participating, answering questions in the chat, interacting, it's going to prevent you from any distractions or any loss of focus. The more you are interacting, the more you are keeping yourself away from distractions, right? So for example, if you have somebody else in a room that you are currently in, please ask them not to disturb you for the next 3 hours, because this is something which I hope you understand is going to be really, really eye opening and important for you. Okay. And last but not the least, if you do not pay attention, you lose opportunities. It's as simple as that. We can teach the same things to all 3,000, 3,500 people of you. But I know everybody's takeaway, everybody's end outcome is going to be different. Why? Because everybody has a different level of priority that they're giving to the teachings of the 4 day of the FFA. right? And of course, they'll be able to take more advantage out of this. They'll be able to take home better decision making out of this. So please make it a point that you pay attention, right? Same learning for everybody. It is up to you how much you make of it. Okay. So, having said that, now at the risk of sounding like a strict school teacher, I will ask you a question, by the way. How many of you did yesterday's homework? Me. Okay. All right. Done. Yes. Absolutely. Yeah, I don't want to come off as a school teacher, but yes, homework is non-negotiable. Okay, so let's quickly go through all the homeworks that we had discussed that we're going to, all of you are going to do. So first was to apply the EMI calculator, the link which Aditya had showed you, the wonderful, wonderful way in which you can use prepayments to lower your debt burden, right? To save yourself at least, 20% of the time that you'll be paying up a loan for. So, how many of you have applied the EMI calculator and checked how much an annual prepayment for your own loan can reduce the tenure by? Let me know in the chat. What was the outcome for you? How many years did you save and how many years of interest? Okay, 1 year, perfect. Reduced by 4 years, 6 years, 4 years, 7 years. But by the way, how much of quantum? Like, how much are you saving in terms of interest? Reduced by 3 years, 4 years, 2 lakh reduced by 9 months. Perfect, perfect. You know what? Let me show you what all of you have to say, right? Let me show that to you. Let me take a quick screenshot. Let me show that. So, a lot of you, that's really, really good to see, right? That's you're already implementing the learnings, the smart concepts. Perfect, perfect, perfect. 1.5 lakh. Amazing. 10 years. My God. 10 years is a lot. That's amazing. Hmm. What about quantum? 11 lakhs in total. Perfect. Perfect. 11 lakhs in total, 4.5 years. That's amazing. What else? Okay. 20 lakhs saved, 3 years. My God. 15 years to 8 years. Amazing. Settled it in 3 months. Perfect. Perfect. It's good to see that, you guys have taken the learnings from yesterday. And I'm sorry if I'm missing out any. There are so many replies, right? It's just lovely to see 7 years, 25 lakhs. 15.5 lakhs, 7 years. My God, amazing, amazing, amazing. So just tell me something, by the way, how many of you are happy? How, like, you have just done this? I'm pretty sure not, you have not started your prepayments yet. But how many of you are happy that you have learned something which makes sense and you have taken the first step to, make it count, put it into effect? It's nice, happy. Does it give you a sense of satisfaction? Yes, because I'll tell you something. Knowledge is very, very important. But what you do with that knowledge is also very important. So, two things. You got the knowledge yesterday, and I'm so happy to see that all of you have started implementing it. Thank you so much for that. It is really, as a mentor, as a person who is trying to, you know, make these concepts known to you, I couldn't have asked for more. Thank you for being such a wonderful, wonderful set of students. Perfect. Now, as for the second homework that we had, if you have a credit card, I'm pretty sure you know the benefits that there are using it, right? If you're using it the right way, the smart way. But how many of you looked for a credit card of your choice and applied for it? Me. Okay, how many of you applied, by the way? Let me know which credit card did you apply for? Okay. All right, I'm looking for one. ICICI, one card, IDFC, amazing. Okay. Let me tell you what everybody is applying for, by the way, those who are applying for credit cards afresh. IDFC, Amex. So a lot of people going for Amex. I personally love Amex, right? I've been using Amex for quite some time. I absolutely love it. The points and everything. As I was saying, right? Just taking a vacation, I'm able to use all the points, booking my stays, HDFC, ICICI. Perfect. Don't know which credit card should I go for, guys. I can, of course, there's no affiliation over here. I'm just giving you something off the top of my head. You can go if you are looking for a lifetime free credit card wherein you don't have to pay and you do, let's say, a lot of shopping on Amazon. I think the Amazon Pay ICICI card makes a lot of sense. Especially if you're a Prime member, you get 5% cash back on each and every spend. And we know that we make only the essential spends on Amazon, correct? So even for your essential spends, you get 5% cashback. That is great. Then you have the Amex cards. I think Amex is not taking application for the Platinum Travel. That's a good card. But then you have the Platinum Reserve, which is the next year. And then if you get an invitation, you can go for the Amex Platinum card, the metal card, right? Even I would say Axis Atlas is a good card. I'm not sure whether they're taking applications right now as well. If you have somebody who's a frequent flyer, that makes a lot of sense. Regalia Gold is a very good multi-purpose credit card, right? If you, let's say, use your credit card across the board, nothing specific per se. For petrol, you have all those. You have SBI, ICICI credit cards, right? They're tied up with this petrol pumps. So I think it's SBI and BPCL and ICICI HP. That is good. If you want cashbacks, if you want to use your credit card for your UPI transactions, you don't want your bank account statement to look like 10 rupees, 30 rupees, 100 rupees here and there, like endless statements. You can go for a like RuPay credit card as well. There are free options. HDFC, I'm forgetting the name of that card, which is Tata Neu HDFC credit card is good for that. So yes, do your research. There are multiple options. There is no one size fits all. It basically depends from person to person what their use cases. Do your research, go through YouTube. You will get to know what works for you, right? But there is something for everybody. If you use credit cards the right way, there's something for everybody. And now, okay, coming back to our last homework, read at least one money control news article. How many of you did that? Me? Okay, what is the news that you went through? Tiger Global verdict. Okay. What else? What else? What happened in the stock market today? Okay. Wipro to 63 crore hit. Perfect. Okay. Grow AMC's valuation. Yes. Okay. Reliance results will be out. Yes. So just tell me something. You like we have fallen out of touch in keeping up with the news, right? I think that is something we used to do as in our school, in our colleges, in our early professional career. But now there is so much information. I think we have stopped keeping touch with news. But all of you who went through the news consciously, did it feel good to be back in the know-how? Yes, yes. So please make sure that you make this a habit. Keep on continuing this so that you're always in touch with whatever is happening in the financial and business space. Now, thank you all for doing the homework. Now, let me bring you back to the FFA schedule. Again, yesterday was day one. We did finance for the future. I taught you four simple investing frameworks, which you can try and test, customize. I taught you how to use AI to piggyback on the extensive research that all these, experts do, and then you get a consolidated summary. Today, in day two, we're going to learn about building strategies, right, for trading. I'm really, really excited to share everything with you. Then on day three, tomorrow, we're going to learn how to trade using AI. And on day four, we're going to see how you can invest using AI and also identify multi-bagger. Do your research for multi-baggers using AI as well. So again, let's quickly, before I get you on with day two, let me quickly summarize whatever we did in day one. First and foremost, we did the magic of prepayment. Aditya taught you that how to get out of debt faster with the smart EMI calculator. We understood the importance of asset allocation. We understood the different asset classes available to us, and we also factored in inflation, right? So that we understand real returns, which is inflation adjusted returns. By the way, after adjusting for inflation, which was the asset class which stood out from a growth point of view? I want all of you to tell me that in the chat. Stocks, absolutely perfect. Then we went on to do a simple analysis, a research that was already published. We went through that and we saw compared Nifty with equal allocation. right? And we saw that a diversified framework, or we learned diversification and how it is important in creating your stock portfolio. Correct. Then we went on to learn the Nifty EQ SIP idea, which has generated 17.3% IRR backtested over the last 5 years. We learned how SIPs can also be smart. Nifty 50 does not mean market weighted, it can be equal weighted also. All of you learned something new with respect to this yesterday. Then we learned how to gamify Nifty. We learned to look at it from a different logic. We learned how Nifty is rebalanced, and then we backtested that logic and got 33.1% annual returns. Yes, loved it. Very simple logic, right? Then we moved on to a third framework, which is Alpha Plus Investing Screener. That generated 63.6% backtested results in 2024. What did I do? We leveraged fundamentals. We used common platforms like Screener to do smart filtration of stocks, correct? And then we learned how to get curated insights using AI based on all these professionals' hard work. We learned how to get into the right mindset for trading and investing. We learned how much of a different returns can make. 15% versus 25% kgr. How much was the difference? Was it just 10%? It was 14 times. We learned the FII build-up framework, which was the fourth framework that has generated 29.5% backtested annualized returns. All of you learned this again, very simple swing trading framework. All of you, even if you're new to the market, you learned it, and I know that you loved it. And last but not the least, we saw a small teaser or a glimpse of the magic that a rule based trading system has. It can save 99% efforts, just takes 20 minutes a day, and helps you identify smarter opportunities. Yes, all of you love day one, and you know what? You're going to love day two even more. Let me tell you quickly summary of what we're going to learn today. Pratik sir will be walking you through a structured trading framework, explaining the logic, assumptions, historical observations with backtested results. Then you will learn how professional traders use a little known layering concept to optimize their returns. Then we are moving on to learning how you can trade alongside with your job using a peak framework. You will also learn how to build a no code rule based trading system yourself. We will see the we will uncover the untold truth of the stock markets. And later, I have the biggest surprise for passionate learners. Plus, I'll be taking your attendance. So don't forget that. And without any further ado, to get you started with day two, I would like to invite Pratik sir on the call. Let's give Pratik sir the warmest welcome because I'm pretty sure he's going to blow your minds away. Welcome,
Hello, hello,
Pratik.
hello, everyone. How are you guys doing? How is everyone doing? Good evening. Good evening. Good evening. One second before I just let me share
Every
my
day is excited
screen.
for trading.
Super.
That's great.
Guys, can you guys hear me? Okay, you guys can see my screen. Yes, superb. Yes, okay, wonderful. Okay. So, welcome everyone to today's session of day two. We are going to cover a lot of things, what Rahul already mentioned. I hope, I mean, you will have to listen to my voice for the next few hours. I will try my best to make it worth everyone's while to be here. But I can assure you something that these next few hours are going to pass by in the quickest way. All I need from you guys is your 100% attention. I'm already seeing some questions here regarding people who are, having some questions from yesterday's session. I think yesterday's session was amazing. We picked up a lot of new and important things. But what I don't want everyone to do is get caught up in yesterday's session and not focus on today. Because just by doing that, you might lose out on the current session that we are discussing. Okay. So, like Rahul said, we will be giving you the notes, the PDFs of everything by the end on day four. But for now, let us absolutely focus on today's session where we are going to discuss build trading strategies. I'm going to take you guys through the entire process together. Sounds good? All good. Love it, guys. By the way, love the energy in the chat. It just makes it superb for me to have spend the next few hours with you guys. Okay. Amazing. So I always want to get started off with asking one question, and please, and let's have all of you reply to this question. Okay. So the question is, how many years of trading experience do you have? Okay, so if it's zero, please say zero. There's no shame in it. If you're 1 year, 5 years, 6 months, no problem. If you say I have only invested till now, that's also fair. But in terms of trading, zero. I'm seeing a lot of zeros. 4 years, 2 years, 6 months, zero, 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 1 year, no idea. 13 years, but invested 1 year, zero, zero, 6 months, 1 year, zero, zero, 3 months, option trading. Okay, 0 to 3 years. 0 to 3 years, क्या होता है? 4 years, 10 plus years, superb. 0, 15, 16 months. Zero investing for the last 5 years, superb. 6 years, zero, 10 plus years, zero, zero, 4 years, 10 years in trading. Superb. Okay. So I am seeing a lot of people who are absolutely new to the markets, who a lot of things which I speak today may be new to you guys. But a lot of you here with us are also people who have had some experience. For example, some people have been doing SIPs in mutual funds, some people have been investing in stocks, or some people have been even trading actively in the market. And for all of you guys, I am pretty confident that each and every one of you is going to take something away from today's session. Okay. All right. So I'm going to, teach and go forward with today's session in such a way that even if you have no idea about the markets, you can understand. Okay. So let me go with that, guys. So people who have idea, cut me some slack. Okay. So let's all do it together. I'll try to make it as interesting and as fun as possible for each and every one. Okay, so this was the first question. This will help me, pace today's session better. But I also want to ask you guys another question. Sir, please increase your volume. Is my volume low? Is my volume low? No, right? Okay, okay. Maybe at your end. Okay. Super. Okay. All right. So next question, guys. Please listen to this question carefully. When you and before you go on, listen to this and then answer it. Okay. So the question is, on a scale of 1 to 10, how strongly do you feel self-learning basic concepts of trading the markets will make you successful as a trader? Okay. So if you believe that, let's say, by reading books, by watching YouTube videos, reading other articles, you will become a successful trader, you give a bigger number, 9, 10, whatever. If you don't believe it, give it a smaller number. Okay. Five is not allowed, okay? Five middle is not allowed, okay? So tens, eights, nines, twos, sixes, seven, tens, threes, ones, tens, nines, uh, seven, nines, okay? Interesting. Seven, 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 five, 7,000. Wonderful. 8.5, nine, 7, 9, 9, 1. Okay, perfect. Chalo, samajh aaya. Now, this question is for me to understand your mentality a little bit. Okay, everyone's mentality, and let me tell you uh, what the truth is. The truth is that this whole concept that self-learning will be sufficient is actually one of the biggest misunderstandings. Now, uh, why am I saying that? I will. I'm saying that right now, but you don't have to believe me right now. Okay, whatever I will be showing going forward will prove what I am explaining in this statement. Okay, so if you believe that yeah, मैं video देख लेगा, मैं ये कर लेगा, and I'll become a successful trader, the reality is a little different from that. Okay, so but again, like from today's session, I want you to not believe my statements because we will be looking at data and facts and then coming to conclusions. All right, super. With that, let's absolutely get started. I want to get started with one concept, and that simple concept is what we call breakout. Okay. Let me. Okay. Yeah. Okay. So you can see my screen. I'm going to take a case study here. But before I even go to the case study, I want to basically, take a step back and talk a little bit about, just basic things. For example, what is a share? We talk about the stock market, we talk about this and that. What is a stock? So can anyone tell me, when you buy a share of Reliance, let's say, what essentially are you doing there? When you buy a stock of Reliance, one stock of Reliance or one share of Reliance, what essentially are you doing? You're buying a part ownership of a company, right? So you're buying a part ownership of a company. So in a way, if you when you're buying shares, you're buying a ownership of a company. Okay, so that's the main point. Now, those shares are traded in exchanges. We all know there are two exchanges in our country: BSC, Bombay Stock Exchange, Dalal Street. How many of you have been there? How many of you have physically seen Dalal Street, Bombay Stock Exchange? Okay, so you guys must. For people who have not, you must go and see. And the National Stock Exchange. How many of you have seen? Any guesses? Tell me, people who have seen. Where is the National Stock Exchange? In Mumbai? Yes, it's in BKC. Okay, so it's in BKC. So that's the Bombay BSC is the oldest exchange, but NSC actually is one of the biggest exchange right now. So majority of the trades happens in NSC. Okay, super. Now, coming to the screen right now that you guys can see, we are looking at this red line. Okay, so you can see this red line is going up. This red line is going down. Sometimes it's going up. Sometimes it's going down. Okay. Now, if you look at this red line, assume this is part. This is a stock. This is a price of a stock, right? The price of a stock goes up. Price of a stock goes down. Now, even if by just simple logic, right? If someone asks you, Pratik, why does the price of a stock go up and why does it come down? I have a very simple answer. You guys also know basic economics. You guys heard of the term demand and supply? Demand supply term, suna hai sabne? Yes, very simple term, demand and supply. Okay. When the demand for something is higher than the supply, what will happen? The price of that will go up. When the supply is more than the demand, what will happen? The price will come down until it finds some kind of equilibrium. Okay, that's what is happening in terms of basic economics. This is happening with the share price. Okay, now when the price is going higher, we call it bullish. When the price is going lower, we call it bearish. Okay, now let me give you some context. uh, you know, the term bull or bullish. Have you guys seen outside Bombay Stock Exchange like a big bull with the horns going down? Like majority of the, even in the New York Stock Exchange, you will see there's a bull, right? It's called the, yeah. So the reason it's a bull or a bullish when the prices go up, because when the bull attacks, right? What does it do? It pushes the opponent up, uses the horns to throw the opponent up, right? So similarly, that's why buyers are called bulls or bullish. In the contrary, you look at bears, okay? When the bear attacks, what does it do? It holds and pulls the opponent down. It claws the opponent down, correct? So that is why the when the prices come down, it is called bearish. I hope you will never forget this concept again. Bull and bear. Okay. Yes, some of you are already mentioning, I think these terms have become really famous after the series Scam 1992. I don't know how many of you have seen it. If you have not, you must. It's a fantastic series on Harshad Mehta, who was known as the Big Bull. Uh, I want to ask you guys, who was the person who was called the Bear Gang? Who was that person? Manu Bhai? Correct. Okay, so Manu Bhai, Cobra Gang, yes. So they were part of the bearish gang who were wanting the price to come down. Superb. Okay, so let's not forget this thing. Okay, all right. So now what we're seeing is the price is being pushed up by the bulls, goes to a point, and then starts coming down. The bears start pushing it down. Again, the bulls try again, goes to a similar place, again comes back down. Third time goes up again, similar place, comes down. Now, do you see that this dotted line here, the point where the sellers or the bears are super strong and are not letting the price go above that place. Can you guys see that? The point where the sellers are not letting the price go above, that point is called a resistance. Resistance matlab to resist, to stop. Okay, so think of it like the ceiling of your house. Okay, every time you take the ball and throw the ball up in the ceiling, what happens? The ball hits the ceiling and comes down. Similarly, there is a price point or a point in the stock where the sellers are strong. They overpower the bears, overpower the bulls. The supply is more than the demand, and they push the price down. Okay, now, once that has happened, every time the price goes down, the bulls try to fight back again. And finally, on the fourth time, when the price goes above the resistance, that is, the bulls finally overpower the bears, what is happened? This is what is called a breakout. This is called a breakout. The phenomenon where the bulls overpower the bear, where the resistance, the price goes above the resistance, it is called a breakout. You guys can see the statement here, very simple. It occurs because of a shift in sentiment and opinion of the people from bearish to bullish. Guys, can I get a super clear in the concept of breakout? Okay, हमने बहुत we have taken very detailed small things and explained to you what the concept of breakout is. Okay, so point resistance where the stock is getting stuck. Finally, it breaks above a point. It is called a resistance. Okay, super. Three times is not mandatory. I'm just for explanation reasons. This is what I'm showing to you. Okay, third time is not mandatory. Okay, let's look at some examples of it. So we are looking at the stock price of Maruti. So you can see the red and white bars. They represent, we call them candles. We will not go into it right now. So each represents 10 minutes. Okay, each represents 10 minutes time frame. Now you can see here that the price goes up here, comes back down, goes up again, comes back down. Third time goes up, comes back down. Can you guys tell me what is the resistance point here? Approximately what is the resistance point in Maruti here? The price where the sellers are strong. 7750. Clear, right? 7750 is the resistance. Then what happens on this day? What happens on this day finally? Breakout happens, the price goes above, and then we see the bulls have taken charge and it pushes the price up from 7750. It goes up to almost 8050, 300 points. If you are buying 100 shares of Maruti at 7750 and you're selling it at 8050, your profit is 30,000. Okay, so that I'm just explaining you a simple concept of breakout. Let's look at another example of breakout. This is a chart of Gale. Another example. Everyone knows what Gale is. Okay. Now, what is the resistance level of Gale, guys? Here it comes like three times, four times, five times. Around 115. Around 115 is the resistance. Once the resistance gets broken, what happens? The price moves up from 115 up to 175, right? So do you see the concept of breakout? Okay, all right. Someone is asking what is resistance. Okay, this is like, Ramayan padha diya and now they're asking ki Ram kaun hai. Amazing, amazing. Okay, resistance is the point where the price gets stuck, where the sellers are very active. Okay, so the point where the sellers are very active, that is what is called the resistance. Okay, all right. Now, I don't know how many of you have, how many of you read news or watch TV, all this CNBC hours and, news. These channels are there, no? They keep showing or read newspapers, Economic Times, all of that. Z Business, correct, correct. You see all of these articles coming, breakout आया, buy कर लो, ITC में आया breakout, stock breakout, fresh buy, स्टॉक में ब्रेकआउट आया क्या करने से आएगा you see all these articles, right? 100 times you see all this article. You see more articles like this breakout आया solid positive breakout seen in this stocks, this positive stocks are seeing a breakout here. So you see all of these articles coming, and I showed you few examples. Now you say, Pratik, बढ़िया, done, easy. अभी मजा आएगा, अभी तो पैसा ही पैसा बनाएंगे. Who is Mukesh Ambani? I am going to be the next Mukesh Ambani. Just buy whenever news channel में breakout आया, I am going to buy that stock and I'm going to become rich. Correct? No? No? Why not? Why? Acha. True, true, true. Correct. See, see, you know, we all feel that it looks very amazing, this breakout concept, and it's easy money, and but the reality is sometimes very different. As a matter of fact, more often than not, the truth is that this breakout is not very lucrative. So even if it works, just financially, it is not lucrative. And I will justify that fact. Okay. I will justify that fact to you guys today. Why simply trading a breakout? Why simply just following this news channel, jab breakout aa gaya, buy kar lo, is not going to work. Okay. And we will be doing it by back testing a theory. Okay. By back testing a theory. Now, how many of you are hearing the word backtest for the first time? How many of you are hearing the word backtest for the first time? First time. Okay. All right. Chalo, let me break the word into, let me explain what backtesting means. Okay. So the word backtest means that you are going back in time and testing something. Okay. Now, uh, for example, whether when you, let's say a doctor, okay, you are a doctor, when you have a patient coming to you, wouldn't you want the patient's past history and you want to see how the health of a patient is to make better decision on the patient, right? So their past history will give you a better indication of the possibilities of the future health possibilities. I'm saying great indication. Am I saying 100%? No, I'm saying it's a great indication. Better than knowing nothing is you have some reference that, okay, this is back test, this is tested. आपका ऐसा ऐसा health condition है, you have these conditions, and this is where we can work from. Okay. So similarly here, when we have a strategy or a theory in the market that we want to test, instead of putting your money blindly in that strategy, we want to see how that strategy performed historically. Okay. So let's say 3 years, 5 years, 7 years, the last 7 years, how did this strategy perform? If it was a profitable strategy, wouldn't you be more comfortable putting your money in that strategy? Yes or no? A very simple question. After testing, if that strategy was loss making, would you make your put your money there? You would not. Simple. So you look, so that is what back testing essentially means. You're looking at performance, how it has performed, right? So you're putting your money on the horse. For example, you go bet on horses. If you see the, by the way, don't go and bet on horses. I'm just giving you examples, okay? Don't take my things lightly, okay? So if you're betting on a horse, you will see what, how many races has the horse won. If you see a horse which has not won any race, will you put your money there? You will not. So it's a very simple concept that I'm trying to explain, okay? So we will be testing this breakout theory today, okay? Because I explained to you breakout theory काम नहीं करता तो आप believe मत करो. Don't believe in whatever I say. We will try to backtest it and see actually what does the data tell us. Okay. Now we are planning to do it on Nifty 500 stocks. I'll have to explain this also. How many stocks do we have in the National Stock Exchange? Approximately 2,600 odd stocks we have, around 2,600 odd stocks we have in the National Stock Exchange. Now, out of those 2,600 stocks, there are many stocks which are pretty like small, less people are trading, not very reliable stocks, which can be manipulated, right? So we don't want to be trading in all stocks. We want to be testing this theory on the top 500 stocks in our country, the largest 500 stocks in a country. We want to be testing this theory on. So that is Nifty 500. Nifty 500 consists of the top 500 stocks in our country. All right. Super. And we will be testing this period for over the 7 years. We'll be testing this theory. Okay, 7 years हम देखेंगे how the breakout theory has performed. Till now, breakout understood, Nifty 500 understood, over 7 years understood, clear. What are we trying to do? What the agenda is? I hope everyone is on the same page. Crystal clear? Super. All right, amazing. Chalo, now comes the fun part. So please let's pay attention, okay? All right. So Nifty 500 125 days breakout. Okay. Now you will see, we know we are testing it on Nifty 500. The time is 1st June 2015 to 1st January 2023. You will ask a question, Pratik, why are we trading from 2015 to 23? Why not 24? Why not 25? Okay. The answer is very simple. Between 2015 and 2023, we have seen a lot of events happening. What has happened there? COVID has happened. We have seen multiple crashes during those times. We have seen markets gone up, down, wars, a lot of Brexit, a lot of things happened during that time, right? Demonetization, correct? So all of those things will be incorporated. Now, if I want to test whether a strategy is profitable or not, I want to test it during the times when big events are happening so that I want to be comfortable. Tomorrow, if some big events happen, I don't want my strategy to become like loss making. So I want all of this to happen. So hence, I have taken a period from 2015 up to 2023. Are we all clear with this? Elections are also there. All of these points are there. All right. Super. Now, in our strategy, we have to consider an entry rule. When are we going to buy? Okay. The entry rule is very simple. We are saying that we will buy when the stock close is greater than the highest high of the last 125 days. How many of you felt like a big bouncer over your head? Like a ball just whizzed past your ears and you had no idea, Pratik, what did you just say? Didn't make any sense to me, okay? All right. Let me ask you a question. Okay, let me ask you a question. How many days do we have in a year? Simple. How many days do we have in a year? 365 days. Wonderful. Now, if you have 365 days in a year, leap year ko chhod ke 365 days on average, okay? Uh, we have Saturdays and Sundays when the markets are closed. Saturdays and Sundays markets are closed, and we also have holidays in India. Her month, some or the other holiday is there. So after removing weekends and holidays, there are about 250 trading days. I have taken 250. Some years is 240, some years is 260, in and around 250. Let's assume for the simplicity of calculation. Let's assume 250. So overall, in terms of trading days, how many days the markets are open? There are around 250 days. Okay. Now considering that if 250 days is 1 year, 125 क्या होता है फिर? उसका half 6 months. अभी समझ आया? Okay. Now the rule is that the stock price should be closing above the highest price of the last 125 days. Let me show you in a graph. Okay. So imagine this blue line is a price of a stock. Okay. This blue line is the price of a stock. And this purple line, this point, right, is the point where the stock reached the highest price in the last 6 months. This was the highest price the stock had touched. Okay, this has gone here, for example, right? Assume this price is 100. Okay. Now, we will buy only when today's price, that is close, is above this 100, right? The last 6 months may we take the highest price. And if today the price goes above that 6 month high, we consider it a breakout. Are you guys clear with what this condition means right now? That the stock close is greater than the highest price of the last 125 days? Clear? Okay? Clear, clear, clear. Got it? Super. One more time. So, okay, a lot of people clear, but one more time. This blue line, imagine from here to here is 6 months, okay? From here to here is 6 months. Now the price, for From 80, it goes up, down, 90, goes down again. It goes to 100 and then comes back down, goes up, comes back down. And finally, in the last 6 months, the highest price the stock has gone is 100. And today, finally, the stock goes above 100. That is where we will consider it a breakout. The highest price of the last 6 months. Okay, super. So entry समझ आ गया. Now, once we have entered a stock, we'll also have to sell it. Once we have bought a stock, we'll also have to sell it. Now, our selling rule also very simple. We have kept that we are going to sell after 5 trading days and exit on the close of fifth day. Matlab that if when I buy, after that, whether it goes up or down, I will only sell after 5 trading days. So, for example, if today is Friday, when will I sell it? Saturday, Sunday, markets are shut. So, again, Monday, Tuesday, Wednesday, Thursday, Friday. So, next Friday, I will sell it. Simple. So, basically, you're holding for 1 week. But in a 1 week, there are 5 trading days. Understood, everyone? We are buying when the stock goes above the 6 month high, and we will be holding for 5 trading days. Now, in 5 trading days, if the stock goes down, then I face loss. If the stock goes up, I face profit. Okay? ये assumption करके रखा है हमने, ये rule बना के रखा है. Let's go. I'll tell you exactly the results for it. Okay? All right. This is not for option trading and all. अभी complicate नहीं करते हैं. This is not for anything, Jatin ji. We are focusing completely on Nifty 500 stocks. Okay? All right. How let's go and see the results for this, guys. Let's go and see the results for this. How many of you want to see how what was the results for this if you did this for 7 years from 2015 to 2023? अगर आपने ये rule follow किया, if you have followed this rule, what was the result of this? Okay. So this is what it looks like. Okay. So let me explain this graph to you guys for people. So you guys can see that this black line represents the, if you put your money in the Nifty, for example, let's say you buy a simple mutual fund, index fund, you buy a simple index fund, and if you put 100 rupees at the start, your 100 rupees will become 211 in 7 years. Okay, your 100 rupees will become 211 in 7 years. This is what the black line represents. This orange line represents the strategy, 125 days breakout. Now, let's look at this. Number of trades. Number of trades. Okay, what is number of trades? What is number of trades? How many times that you bought a stock? How many times that you bought a stock and sold a stock? Okay, how many times you bought a stock or sold a stock? That means kitne time uh, it fulfilled the condition of the stock going above the 6 month high. Now, can you see number of trades is 10,417? You guys can see that? Yes? Okay, so that is the number of trades that you've done in the last 7 years. Okay. Now, next is CAGR. CAGR stands for Compounded Annual Growth Rate. Nothing complicated, very, very simple. Okay. That means what was the return, annualized return for each year? So, हमने 7 years का लिया है. It's simple. If I put 100 rupees today, at the end of 1 year, it is going to be 114 rupees. Let's say because of 14%. Understood? At the end of second year, it will be 114 plus 14%. So it keeps adding, compounding over one another. 14%, 14%, 14% करके. That's called compounded annual growth rate. CAGR. Okay? CAGR. Guys, clear about CAGR or फिर confusion है? CAGR. Number of trades are clear. CAGR is clear. Okay, a few people still want compound. CAGR, very simple. Let's say I put 100 rupees at the start of the year. If my CAGR is 14%, that at the end of the year, after 365 days, my money from 100 rupees, it is going to go up to 114 rupees. On year two, it is going to go from 114 plus 14%. So on top of, okay? So that is what compounding means. Now, the next point here is max drawdown. Max drawdown. Okay. What is max drawdown? I think a lot of people may be having confusion with max drawdown. Okay. Let me give you an example. Please listen to this example very, very carefully. Um, and focus. Okay. I'm seeing a lot of people question. Don't don't get carried away with the questions, guys. Focus on the screen. All these questions that you're asking, you will have the answer for it. Be patient. Okay. So listen to the concept of drawdown. Okay. Let's say you have a jar and you put cookies there, biscuits or cookies. Okay. Now, let's say the jar is empty. You put one packet that has 10 biscuits. So, in total, how many biscuits are there in the jar right now? From zero, you have how many biscuits now? 10. Okay, super. Now, you have you buy one more packet because you feel that guests are coming in the house. So, you buy one more packet and you fill it up again. Again, 10 biscuits are added. Now, how many total biscuits in the jar? 20. Okay. Now, there are guests who come to your house. Okay, guests who come to your house. Now, once the guest comes, because after the guest have the tea and biscuits, they eat 10 biscuits. That means how many biscuits are left in the jar? 10. From the start till the point the guest left, maximum biscuits kitne the jar mein? How much maximum biscuits were there in the jar at one point of time? 20. Right? And right now, what is it? 10. So from 20, it has come to 10. From the highest point, it has come to 10. That is the difference is how much? 50%. That is what we mean by drawdown. Okay, so think of it like this. If your 100 rupees becomes 200 rupees, okay? If your 100 rupees becomes 200 rupees and from 200 rupees it becomes 100 rupees again, what is a drawdown, guys? What is a drawdown? 50%. From 200 it has become 100 again. 50% drawdown. That means from 200 your money has become half. That is what it means by drawdown. Now tell me one thing. Do you think you'll be comfortable with a high amount of drawdown? Do you want a strategy which has high amount of drawdown where your money can become half? No, right? You don't want to be in a strategy which has high amount of drawdown. So clearly, what is it that we want in this strategy? What is the drawdown? Minus 46%. Are you guys comfortable with at any point giving away 46% of your profits of your equity? Absolutely not, right? Not comfortable with it? Great. That is one. Now, let's look at number of trades. 10,417. Now tell me, every time that you buy or sell a stock, okay, you know that you are paying STT, you are paying brokerage, you are paying taxes, cess, you are paying all of this, yes or no? Matlab, every time you are buying or selling a stock, you are paying all this, regardless whether you make money or lose money. You have to pay. Correct? Now, does that the higher the number of trades, doesn't it mean that the cost of your thing is higher? That the cost is higher? Now, if there are 10,417 trades and the cost is higher and the return is 14%, okay, don't you think that if you adjust the return for the taxes and the cost, this will look like 3 or 4%, right? चलो 5-6% ही पकड़ लेते हैं, right? Now, if it is 5-6%, wouldn't you be more comfortable putting your money in a fixed deposit than doing all this jhamela? Wouldn't you be comfortable putting your money in a fixed deposit? Why would you take the headache, make the broker rich, make the government rich, and at the end of the day, lose your sleep and you're making fixed deposit kind of returns? Correct, na? You will, doesn't make sense, right? So, in lot of people get caught up in this 14%, wow, wow, 14% return. Strategy is good return, but they lose out that kitna trades, what's my cost, and what happens at the end of the day, they don't realize that they are not making actually any money. Now, if I want to make this strategy better, what do I need to do? I need to reduce my drawdown, guys. 46% is too much. I need to reduce my drawdown. 100% to reduce my drawdown. I need to reduce the number of trades. Yes or no? I can't be taking so many trades. Not possible. And I need to reduce the. I need to increase the returns. I need to increase the returns. Correct. So I need to reduce the number of trades. I need to reduce the drawdown and need to increase the returns. Only then will I be able to make a good strategy. Just by looking at this, do you guys understand now why just simply trading breakouts is not a very good strategy? So in the TVs, when people come and shout breakout, buy kar lo, you may make money here and there, but in actual reality, after taxes and cost, you're not actually making anything. Okay. Now, Pratik, you have told us what doesn't work. You need to tell us what actually works. You need to tell us what actually works. Okay. So the next question is, Pratik, what do the professionals do that is different from the retailers? Right? What do the professionals do that is different from the retailers, and what are the mistakes that we do? How do we think? Okay. Now, it's a very simple concept. Okay. The concept is, uh, okay, let me ask you guys, how many of you know about, heard the term probability? Probability. You guys heard the term probability? Sometimes you must have the maths background, not maths background. I think everyone must have heard. Okay, people hated their maths, but karna pura thoda bahut, right? Little bit maths you had to do, right? Probability. Okay. Now, probability, for example, let me give a classic example, right? You take a coin, heads and tails. Okay. If you toss a coin, what's the probability of heads and what's the probability of tails? 50-50. There's a 50% chance it'll be heads. There's a 50% chance it'll be tails. Okay. Another question I have. Okay. When you buy a stock, okay, you see a stock, right? What are the two things that it can do? It can either go up or it can go down, right? Can it do anything else? Can a stock go? It can only go up. Let's say you get a monkey, okay, and a monkey just randomly buys a stock, okay. Can you just not say that it can either go up or down? That's the majority two things it can do, right? If you think of it in a very small, minuscule scale, right? Now the point is, Pratik, if that's the point, then as a professional trader, my job is to increase this probability from 50% to 60 to 70% by doing some study or adding something to my analysis. How can I improve my probability of being right? Okay. And that is how a professional trader thinks, to bring the probability to your side. How many of you are mind blown by this? You don't think about, it's very simple. If I bring the probability to my side, I will make money. If I bring the probability to my side, I will make money. That beyond that, I don't need to think anything. Right? So that is where the professionals come from. They are not trying to be 100%. They're not trying to be right all the times. They are saying, agar 50 se 55 bhi hua, even if it's 55%, I will make money. Right? So that is the concept. And they do that using the concept of something called layering. Okay? They understand that is a game of layering and probabilities. Now, what is layering? Okay, think of it like a pizza. Okay, how do you make a pizza, guys? The first is the dough of a pizza. On top of that, what do you add? You add the sauce, right? You add the sauce, right? That's where you have. Now, on top of the sauce, what do you add? You add cheese. On top of that, you may add some other topping on top of that, right? Now, you layer one top of the other. You layer on one top of the other. Now, if you just give the dough, you think, will it be a good pizza? Or if you just give the dough and the sauce, will it be a good pizza? No, right? To find that, how can you layer the pizza step by step, and only then does it become a pizza? Now, but if you add too many layers, then also it can become a khichdi also. You will never know. Suddenly you are adding this also and pineapple also and everything in the pizza, and it's no more a pizza anymore, right? So again, we have to be careful about how many things that we want to put and not get overexcited, right? But I hope you get the point, right? So similarly, what we will do is that in our strategy, how can I add certain layers to bring the probability from the 50% to 55 to 60 to 70? Okay, that's how professional thinks. How can I bring the win probability to my side by adding a few layers? And that's what we will try to do to our breakout strategy. So हमने देखा breakout strategy 125 days breakout was okay, not very good. We have to improve it. How do we improve it? By adding layers. Can we all try adding a few layers to that? How many of you want to do that together with me to see how we can add layers to that strategy and make it better? Okay, let's do that. Okay, super. Okay, so add a layer to improve your odds. We are adding a layer of volumes. Okay, so price breakout should be with high volumes. Okay, uh, what do I mean by that? Okay, for people you guys know what a volume is? You guys know what volume is? If you know, you can just write no. Okay, no problem. No, ठीक है. See, uh, for example, wouldn't you be more comfortable in buying a stock where, let's say, a big fund like a HDFC mutual fund or a LIC is buying that stock? Don't you think so? Now, if any big trader or a big investor is buying a stock, you think they will buy 1 lakh, 2 lakh rupees? No, na. They will buy 5 crore, 10 crore, 15 crore, 100 crores, right? So they will put in a lot of money. And more the transaction that happens, more the volume increases. That means the volume represents more interest from the people, right? More interest is represented by more volume. Now, I am saying that along with breakout, if we also add a second layer, that we also want that when the breakout happens, there should be a high volume. Can we add that layer? Are you guys now clear with what I'm trying to say in terms of breakout and volume? Okay, so let's do this. Nifty 500, 125 days breakout and volume. The universe, it's same, Nifty 500, same time, 2015 to 2023. We are not changing the timeline. Entry rule is also very same. We are only working on the second rule. The first rule everyone knows, stock price is greater than the highest price of the last 125 days. That is the first rule. The second rule is volume. That is today's volume should be greater than twice the average volume of the last 125 days. Clear now? Very simple, right? या फिर bouncer? No? Not clear or super? No bouncer. Okay, okay. Let me explain, okay? Let me explain. So first condition everyone knows, right? Stock goes above the 6 month high. Stock goes above the 6 month high. Everyone knows that. Now we are just looking at something called volume. Can you see these bars, guys? Green bars. Green bars represents the volume. Okay. Green bars represents the volume. Okay. Now what we are saying is that we will take the average volume of the last 125 days. All of you guys know what average means, na? Mean. Average nikalna. Okay. For example, okay, I will break it down further because I hope it becomes very clear. Why do we use average? Let's say you are in your office, you have 10 people in your office. Uh, you are, let's say, 5'6". Your height is 5'6". Okay. And if you want to find out whether you are tall or short in your office, what will you do? A very simple thing. You will take the height of each person, divide it by 10. You will get the average height in your office. If the average height is, let's say, 5'8", then are you tall or short? Average height is 5'8", you are 5'6". You are short. If average height was 5'4" and you are 5'6", then you are tall. So you use average to compare, basically, right? So similarly here, we are using the average of volume. So we are taking the average of the last 125 days. That is, we're taking the average volume of the last 6 months. Okay. That means if the average volume of the last 6 months is X, today's volume should be double that at least. That means it should be 2x or more. So if the average volume was 1000 in the last 125 days, my today's volume should be double that. That means hence I'm getting confirmation. Can Are we all very clear with the second layer of why we're using volume to confirm our condition? Yes, super. Chalo. So entry rule, first rule we are clear, second rule we are clear. Exit rule is very, very simple. We are not changing the exit rule. Hold for 5 trading days. Okay, hold for 5 trading days. Okay, this green bars represents volume, guys. Again, please pay attention. These green bars represents volumes. We take the average volume. For example, this white line represents the average volume. Today's volume on the day of breakout should be double the average volume. If the average volume was 1000, today's volume should be 2000 or more. Volume is the number of shares traded, not okay, bought and sold. Every time you buy a share, someone is selling you that share. So volume represents that. Okay. Can we all now see how by adding this layer we have whether we have improved the probability, whether we have made the strategy better or we have made it worse? How many of you want to see the results for this? Okay, let's see what the results show us. So we all know what the black line represents. We all know what the orange line represents. The blue line represents this volume filter. Now, what are we seeing? Has the number of trades gone down, guys, from 10,000 to 6,665? Yes, perfect. Has the return gone up from 14% to 19.74%? Yes. Has the drawdown gone down from 46% to 40%? Okay. Just by doing this from 14% to 19% difference, okay, you see here your 100 rupees after 7 years had become 285 on the first just simple breakout, but your 100 rupees becomes 421. A simple differential of 5%. Okay, so this is what we have done by adding a layer of volume. Now, are you guys happy with this, or do you think we can add one more layer? Add one more layer. Okay, let's add one more layer. Okay, so now we're adding a layer of something called RSI. Okay, RSI should be low so that there is room for price to go up. Okay, let me explain what RSI is so that people don't get confused. Can you guys see my screen? Okay, so RSI stands for Relative Strength Index. Okay, RSI stands for Relative Strength Index. I will try to, we don't need to go into deeper of it so much, but just explaining you guys the basic concept. Okay, Relative Strength Index. Okay, now it's an indicator. I will show you what it does so that we understand it better. Okay, I will. Can you guys see my screen? Swapnilji, can you guys see my screen right now? Yes. Okay, super. Now, can you guys see that this RSI is this purple line here, and you are seeing two bands here. Can you see the top of the band is 70 and the lower band is 30? Top of the band is 70 and lower band is 30. Can you guys see that? Okay. Now, can you guys see very often that whenever it goes above 70, it comes down, like it goes above and near 70, it comes down from there. And whenever it goes near 30, it goes up from there. Can you guys see that? Just examples. Yes. Now, if I mark these places, okay, so whenever this is happening, for example, if I Let me take you guys here. Okay. So what is the value of RSI right now? RSI, can you see this? 56.08. That's the value of RSI. RSI is showing a value of 56.08. Okay. So now as the stock goes up, it goes up above 70. Can you guys see that now? It goes up above 70. Yes. So that is means that when the price, it's telling us that uh, the stock has already gone up, right? The stock has already gone up. Now, do you want to buy something after it has already gone up, or do you want to buy before it has gone up? Because you don't want to buy at the end, right? When it has gone up already. You want that after you buy, it should go up after that. Only then do you make money, right? So you want to buy before it goes up, correct? So hence the condition that we are saying that here RSI should be low. That is, RSI should be low so that there is room for price to go up. And hence, look at this concept. Hence, we say whenever RSI is above 70, it is basically called overbought. Okay, so you see RSI is gone and the price comes down from there. It doesn't happen every time, but I'm just giving you a classic example of it. So, what's the condition, guys? Again, the condition for this will be we want RSI should be less than 70. Yes or no? We want RSI to be less than 70. That's what we want. Okay. So this is going to be our third layer. RSI less than 70. Okay. RSI full form मैंने फिर से बताया. Please pay attention. RSI stands for Relative Strength Index. Okay. Okay. So guys, universe doesn't change. Nifty 500 same 2015 to 2023. Entry rule, the first two rules we are clear. Stock closes above the highest price for last 125 days. Volume is greater than twice the average volume. RSI has to be less than 70. Deepji, correct? Everyone? RSI has to be less than 70. That's what we want. Okay? That is enough for us to think. Okay? Clear? Now, if I don't want you guys, so there's not a question, Pratik, why not below 50? Why not below 60? Then it will become a class of RSI. For now, I know that you want to understand what RSI is and why not 40, 50, 70. But for now, can we ignore that part? Request. Because I'm trying to explain a bigger picture of layering and probabilities. I don't want to go inside deeper. For now, RSI concept you guys have understood. Above 70 is overbought. We don't want to buy when the RSI is 70. Correct? Okay. So very simple. Okay. So exit rule is very same. Only RSI less than 70 has been cut. So these are the three layers. So first is breakout, second is volume, and third is RSI should be less than 70 on the day of breakout. Can I get a clear in the chat from everyone if we are clear about 1, 2, and 3? We've taken a lot of time to go deep and explain each step. Okay, I hope it is very clear. Superb, great to see that. Amazing. Love it. Okay, amazing. Now, can we now see what the results look like? Can we now see what the results look like for by after adding the RSI layer? Yes. Look at this. Okay, so we all know what the orange line is, the simple breakout. The second is the volume layer with the breakout. And third is breakout, volume, and RSI combined, the green one, right? So from 100, it puts our thing to 1013 in 7 years. So now, can you guys see that the number of trades have gone down considerably, almost 90%, from 10,417 to 1493. Yes, yes. So from 10,417, we have gone down to 1493. Have we able to improve our returns drastically from 14% to 19% to 33%? And have we been able to reduce our drawdown from 46% to 40% to minus to 30%? Now, are you more understood the how layering? So, where initially people just be like breakout, breakout, do you now see that how you are able to add two layers and make it better? Right? You're able to add few layers and make it better. And what difference does that make your 100 rupees becomes 1013? 1493 trades in 7 years. Your cost goes down, your profits go up, and your drawdown goes down. Someone will like Pratik, इसके बाद तो और layer add करते हैं. Let's add more layers. We will have one trade and 100% return and zero drawdown. नहीं 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 ऐसा नहीं होता है. Guys, there is you have you know when when you make a pizza, you add a few layers, but अगर mushroom भी डाल दिया, पनीर भी डाल दिया, फिर pineapple भी डाल दिया, it becomes a khichdi. Okay, so we don't want a khichdi. We want a tasty pizza. Now, the ability to know how much to put and how much not to put is the uh, job of a chef. Okay, so this is good, right? This is good. Now, the reason I want to show you something is that when you have something like this, a 33.65% annualized return, okay, this is in 1 year, okay, in 1 year, okay, I want to show you how consistency can overpower chasing unrealistic return with such a back-tested trading system. You guys want to see how consistently doing something over the long run with a back-tested trading system can overpower, big returns, 50% returns, 100%, double karenge, 1 month double. This is what this represents, guys. So from 100 rupees in 7 years, it's 1018. If you keep compounding at 33% a year, which is around 2.5% a month, this is the wealth you can build over long run. This is the wealth you can build over long run. This is 61 lakhs. Okay. So when people push you ki double kar lo paisa, don't chase after unrealistic big returns. Are you guys clear? Because that is not possible to sustain in the long run. You can get lucky by doubling your money once. You will not get lucky doubling your money second time. Okay. Have you seen anyone gambling or winning the lottery consistently? You can make once in a while, but you will not be consistent. So, hence, the idea is to have a rule based trading system, follow it, and do it consistently for the long run. And when you do this consistently for the long run, not chasing very big returns, you will be able to achieve your goals. Guys, I know this number seems unrealistic, but this is simple math. Okay, because at the start, if someone tells you from 100 to 61 lakhs, you will throw chappal at them, right? But what is important is for you to understand to get a trading system, 33% a return, and follow that consistently. Okay, now are we all feeling like Nawazuddin Siddiqui? अभी तो बनता है नहीं, अभी चांद पे है. Can we all? Yes, magic of compounding, right? So this is right. So unveiling to you guys the peak. Abhi Mars mein hai. Badhiya, badhiya. Uh, Peak framework. Now I have been, through this time already have been explaining you guys. We have already actually started exploring peak, and each word of PEAK means something. Okay, so when we learn peak framework, we have learned how to use technicals right now. This indicators, volume, RSI, like a professional trader, right? The prerequisites that you need to be a trader, knowledge and information versus wisdom and application. When I started off, I asked you a simple question: if you go read the books, if you do this, will you become a successful trader? Many of you said eight, nine, tens. Now, my question to you is, do you now understand the difference between what is knowledge and information versus what is wisdom and application, because everyone can know what breakout is, what volume is, what RSI is. You will find it in all books, you will find it in all YouTube, everywhere you'll find it. But how to get it all together to make it work needs wisdom and application. Can I have people, if you agree with me, drop in a agree in the chat? Yes. So that is the difference, guys, between knowledge, information versus wisdom and application. I hope you guys understand this point, very, very subtle. What makes the professionals perform consistently, and how are they different from the common man or retailer, guys? What have you learned till now? How are they different? They are different because they focus on something called layering and probabilities. Okay, that's what we have basically figured out today. Now, after all of this, okay, after all of this, Pratik, there are 2,600 stocks. This three layers I have understood. Am I supposed to go through each and every stock every night and find that iska breakout hua hai? This one has volume, double volume, and this one is RSI. Do you think that's possible, guys, to be able to analyze 2,000 stocks every day? Not possible, right? Impossible. 2,600 stocks, so 500 stocks. Even 50 stocks will be difficult. Forget 500. Right? So that is not possible. Do I have a magic wand? No. Do I have the time? Absolutely not. So what's the solution? The solution is to exclude the noise, and we will exclude the noise using screeners. So we have built some scanners and screeners for ourselves, and we will be able to do that. Now, remember that when we use these screeners, we will be able to filter out all the details and the precise stocks which follows our screeners. Now, I'm going to show you and build the screener in front of you. Do you need to note it down? No. Do you need to build it alongside me? No. All I want you to do is look at the screen. We will be giving you this screener, the link for it, the step by step process to build it also. All right. So do not worry about anything. Are we all clear with this? You don't have to worry about कि प्रतीक इसका थोड़ा समझाइए, because I don't want you to build it alongside me. That's not the point. The point is to only listen and watch me do it. We will be giving you the exact template and the document with step by step points. Okay. So we will be exploring something what we call the Richie Rich breakout. And for that, we'll be using a platform called Chart Inc. And we know, you guys remember Rahul yesterday showed you guys a little glimpse of this, that we will be building something. So that's what we are going to do right now. And so again, you don't have to build it alongside me. You just have to watch me do it. Okay. So for that, we will be going. So guys, first of all, clear, right? Are we clear? Yes. Okay. Super. Chalo. Uh, chart link is not working. Yeah. Okay. All right. So this is called charting.com. I have an account here. You can create a free account here. You don't have to, you don't have to pay a premium service. So to use the screener, you don't have to buy the premium version of it. Clear? You don't have to buy the premium version of it. Okay. So you will sign in. I have an account, so I'm going to just log in, and I'm going to have here. Okay. Here I'm going to see screens, and I'm going to see create scan. Okay. I'm going to create the scan together. All of this is mentioned step by step. So I'm just showing it to you. Because I'm showing it to you, you will be getting all the steps one by one with screenshots. Okay. Don't worry about it. Okay. All right. So let's do it together. So what was the first thing that we are doing? What was our stock universe? Which segment are we doing? Nifty 100, 200, 50, 500. Which one are we doing? We were looking at Nifty 500. Correct. So we will be filtering the all stocks in Nifty 500. Perfect. What was the second, what was the first logic, guys? The stock price should close above the 6-month high breakout, 125 days breakout. Today's close should be greater than that. So I will write daily close greater than the daily close greater than the maximum price of we want maximum high. I'm going to think, guys, don't worry, I'm going to explain to you what I am doing, but for now, till now, are you guys clear? Daily close is greater than the daily high price of the last 125 days. The maximum price that we have gone in the last 125 days, this is what I'm looking at. So it's now the only thing that we have to do here, instead of daily, we have to do 1 day ago, because I want today's high to not be considered. I don't want today's high to be considered. So hence I want the highest price from yesterday onwards. Confused? Little bit confused? Clear? Okay. For those who are a little bit confused, can you see the button, explain button here? For people who are a little bit confused, do you see the explain button here? So you just click on the explain button and this is going to explain to you the logic, okay? So look at this. The filter checks if the current daily closing price of the stock is greater than the highest price recorded over the last 125 days. Are we clear now? Is it now clear what it is explaining to us? That's what we want. The current daily closing price of stock is greater than the highest price over the last 125 days. So this is our first condition. Now, out of 500 stocks, can we run this scanner and see how many stocks fulfill this first condition? Okay. So run the scan. How many stocks fulfill the first condition, guys? How many stocks are there? 8 stocks. How awesome is that? How awesome is that? We have been able to remove 402 stocks which does not fulfill this condition, and we have gotten 8 stocks which fulfill the first condition of our breakup. That means all of these stocks today have gone up above the last 125 days high. Clear? All of these 492. Yes. Understood? Yes, 492s. My bad. Okay? Clear. Can we now put the second layer? What is the second layer, guys? What is the second volume layer? Volume layer. Okay. So volume layer, what are we going to add? We want the daily volume, today's daily volume, to be greater than the average volume of the last 125 days multiplied by 2. That means it should be double that. So what I want is the daily volume should be greater than SMA. So the average volume of I want a daily volume, the average volume of the last 125 days. This will be 1 day ago, and this will be into number 2. Confused? A little confused? Okay. See, the point is you don't have to learn how to do this, and hence we'll be giving you this scanner exactly pre-built to you guys. Okay. So SMA represents the average. Okay. SMA represents average. SMA represents the average. So what we're looking at, the daily volume is greater than twice the average volume. Okay. So if we click on the explain button, you will see it. The explanation coming here very simply. Simple. Look, the daily volume of the stock must be more than double the average daily volume from 125 days ago. This means that if the average volume, for example, is 1,000, the current daily volume should be greater than 2,000. Okay. So that is what we want. Okay. Now, can we run this scanner and see out of these 8 stocks, which are the ones that fulfill the second condition also? Okay. Excited drum rolls. Let's run it. How many stocks, guys, are fulfilling the both the first and second condition? Five. Superb, right? From 500 to 8 to 5 stocks, we have filtered down to all of these 5 stocks are fulfilling this condition. Now, what's the last condition that we want? What's the last condition? RSI should be less than 70. This is a very straightforward. So we want RSI should be less than number 70. Clear? Everyone? Twice of average volume here. I did that. So I did the twice of average volume. Okay. RSI less than 70. Everyone clear? So can we run the scan now and see out of this five, how much, what comes? Yes. Okay. How many stocks do we see, guys? One. How amazing is that? In just less than a minute, I have from 500 stock come down to one stock, which is fulfilling my all three conditions. Okay. And that stock is Tech Mahindra. And this is the thing of it. It has gone up today with high volumes, and I want the RSI is less than 70. This is fulfilling my condition, and this is how I want to trade with it. Okay, so we will be giving you the exact scanner for this, and I hope you will be able to use it. Very simple. If you're buying it, when will you ideally sell it? After 5 days. RSI 14, this is a default setting. Don't change it. Okay. This is RSI default setting of RSI is 14. Don't change it. I'm not going to go into deeper why 14. Let's just focus on RSI should be less than 70. Sounds good? Okay. Are we clear with this? Understood how we have now build this, not only build the layering, but build a filter to scan all of this very simply. Whatever we have learned in theory, practically in today's day, this is the stock that we are getting on a filter. Now, am I telling you to go and buy this, guys? This is not a buy recommendation. Understand that this is only what I'm showing you is the possibility of how you can scan stocks without having to going through it one by one. All right. Okay. Super. Hmm. Okay, so this is the logic. We are also going to share with you similarly another logic whereby the stock, wherever it goes below. So this, what's the example right now we showed you? That when the stock goes above, right? When the stock breaks above the resistance, what we I have I'll also be sharing with you a scanner at the end. In the thing you will also see a scanner which is showing stocks which are going below. Okay, so that you can use that also if you want for your possible help. All right, guys, are we clear with the scanner? Are we clear with how we have built the scanner? And don't worry, you will be getting the step by step details of this with you guys. Okay, so don't worry about that at all. All right, super. Now I saw a lot of people. I saw a lot of people, asking me and discussing Pratik about options. Okay. Oh, someone is asking. Wait. I don't want to miss out on it. I don't want to take the name, but someone says mind blowing if this works and no loss. Okay, I want to clear something here. Okay, I want to clear something here. Do you think that you will be 100% right and always making money in any? You will not. So whoever thinks that there is 100% profit, okay, there are only two people in the world who can tell you 100%. You know who are those two people? You know who are those two people? One is God and second is a liar. Okay, one is God and second is a liar. Only two people can tell you 100%. So anyone who tells you 100%, especially in the stock market, run away from them. Okay, there's nothing called 100%. Are we clear with this concept, guys? So please, I'm saying this myself. There is nothing called 100%. My point is at the end of the day, if you are making money, some losses. 70% probability means what? Out of 10 times, you'll be right 7 times, you'll be wrong 3 times. Is that not good enough? Is that not good enough? Okay, so I'm being super, super clear here, guys. I hope you guys appreciate this because there's no, I can't sugarcoat this in any way. Okay, that's the truth, and you like it or you don't like it. Because if there was 100% profit chance, then Mukesh Ambani will not be running Reliance. He'll be trading. You understand? So think of it, right? So that's the point. Okay. Okay. Now I want to show you guys another people a little bit different thing. Okay. Uh, a lot of people trade in options. How many of you trade in options or heard of options? And did not. Okay, a lot of people. Okay, so I'm going to show you another concept that I have built a logic that you can look at just using RSI. Just by using the concept of RSI, you can filter that, especially if you're trading in options. If you don't, how many of you have not heard about options at all? How many of you have heard not heard about options at all? Me, no idea. Wonderful, guys. Bhul jao. Don't, for now, forget about it, okay? If you don't know about it, for now, you can just sit back and relax for some time. 2 seconds ke liye. Okay, all right, no problem. Okay, so I'm going to be sharing a little bit of logic, stock options buying logic. Hear me out. See if it makes sense. Okay, so logic is very simple. We will be using a stocks from the FNO segment, stocks which have options and futures. That's the first logic. Then what we want main thing is that the RSI in the hourly time frame, the RSI should be greater than 58. RSI should be greater than 50. So all the people, can I quickly have you guys type out what should be the RSI? First condition is RSI greater than 58. Okay, we have gone beyond the previous strategy. Right now in this, RSI has to be greater than 58. But I also want RSI to be less than 65. That means when I say RSI should be between 58 and 65, understood? RSI should be above 58 but less than 65. Okay, that means not overbought also. It has not gone up too much. Okay, and on daily time frame, it should be greater than 60. Okay, so this is our three conditions where we are using only RSI. Okay, we are only using RSI. When all these three conditions are met, you can either buy shares of that stock or you can buy and add the money options. Your stop loss will be when RSI is less than 40 and your target will be when RSI is greater than 75. What will you do? You will simply sell the shares or sell your options. A little bit confused. Can I take a quick example to show you guys how? Can I show you an example to explain this basic concept? Very simple. Okay, यहाँ पे हम we are only using RSI. Okay, so let's look at this example. Okay, so can you guys see that RSI? What's the RSI value here, guys? 59.61. RSI is 59.61. Can you guys see here? RSI is 59.61. That means RSI is greater than 58 and less than 65. Is our first two conditions met? Yes or no? In Bank, Canara Bank? Yes. Okay. Now, if that is met, we will be buying. Now, you can either buy the shares. So if you are don't trade in options, you don't know what is options, you will buy the shares of Canara Bank, let's say at 128 rupees. This is on hourly time frame, 1 hour, okay? At 128. Or if you are someone who trades in options, you will buy the 128 call option. 128 call option. The 128 call option at the same time. What's the price, guys? 4.9. Are we all clear? So people who don't know options, what can you do? You can buy the shares of it. You can buy the shares. Clear? If you don't know what options are, what can you do? Very simply, you can buy the shares of Canara Bank. Yes or no? Yes, you can buy the shares. For people who know options, they will buy the at the money options, which is 4.9. Now, people who don't understand what at the money option is, you will not be trading in option. You will be trading in shares. Clear? So for people who are asking, Pratik, what is call option or what is CE? That means you don't know options. So you will trade in shares. Are we clear? Are we clear till now? Very simple. जिसको options समझ नहीं आता, for someone who doesn't understand options, you will be focusing on shares. Clear? Okay. Now, what will be our target? Our target will be when RSI goes above 75. When RSI reaches 75, we will sell, and our stop loss will be when if RSI goes below 40. So we bought here. Did RSI go below 40, guys? Here, can you see this purple line? Did it go below 40 here? Did it go below 40 here? Let me zoom in. It did not go below 40. It went to 75.87. So our target is achieved at 138. So if you bought shares, you bought at 128 and you sold at 138, right? So that is what you have done with shares. If you had bought the option, you bought at 4.9, you sold at 11.3. So for option traders, very simple. If you had bought that option 4.9, one lot is 6750, total investment of 33,075, and you sold at 11.3, 76,275, you have made a profit of 43,200 in a trade just by using RSI. You see how we have played around with RSI a little bit? And for people who are buying shares, simple buy at 128. If RSI goes below 40, stop loss. If RSI goes above 75, target. Simple. But again, do you guys understand? The main point of it is going back to knowledge information versus wisdom application. Is that do you see how we are able to play around with RSI, play around with RSI and make RSI innovative? Yes, absolutely. So how many of you feel that now you are ready that you can trade the market systematically alongside your job and more importantly without compromising your professional commitments? I know all of you are professional people and I don't want any one of you to leave your professional commitments to come into trading. But whatever I have showed you till now using the scanners, how much time does it take you to filter those stocks every day if you have to do it? Maximum 5 minutes. Maximum 5 minutes. That much time, even if you're a professional, you can do. That is what the point of the matter was. Okay. So that was completing our second framework of peak. Brings us to the third framework, automating the system. Automating the system. Abhi, abhi, uh, suppose we saw, which was the stock that we saw, guys, in our filter? Tech Mahindra. Okay. Tech Mahindra we saw. Okay. Tech Mahindra. Okay. Now, if you can't, let's say when the tech this happens, you want to be able to be alerted, right? That this has happened. Tech Mahindra has given this signal instead of going and searching, doing it manually, right? So what can you do? You can probably set an alert that when Tech Mahindra this happens, give me an alert. That's one way of doing it. That's one way of doing it. But what if you were not available when the alert is triggered? What if, let's say, when the alert is triggered, you were in a train, you were in a flight, you were in a meeting, would you be able to do it? Would you think that is good enough? You could be, right? Many of you have, maybe lost opportunities when you are not available, you must be in a meeting. So if you want to automate, alerts are not the best way. Correct? Alerts not the best way. There must be a better way, right? There must be a better way to do it. Right? Now, we will come to that better way. We will come to that better way. But before that, I want to go into the last part of this called peak, called the kill the risk. Okay, I want to go to last part, which is kill the risk. Uh, okay, guys, I'm going to tell you that what I'm about to share right now is going to change the way that you look at the markets. And I'm not even hyping it up. I'm going to share with you something that is going to be super eye opening. It's very basic, but it's going to be super eye opening for you. Okay. Okay. It's very simple for people who are asking about peak. This P is the prerequisites that you need to be a trader. E is excluding the noise by using scanners. A is automating the system, and K is killing the risk. Okay. That's what we will do. Okay. All right. So let me share with you. Can we all focus on this concept right now? Because I don't want anyone to miss out on it. Because I know after I talk about this, many of you are going to tell me that Prateek, this was the most important takeaway from today's session. Yeah. Right. So even with all the things that I have layering probabilities, that thing I've explained to you, this thing is super, super important. So can we all bring ourselves here? Okay, so let's absolutely bring ourselves here right now. Okay, okay. So, what traders think their share market journey will look like when they have a 70% accuracy? Look at this screen. Okay, so let me explain what this represents. So, suppose you have a strategy which has a 70% accuracy. What does it mean? So, there are 100 trades. So, 0 to 10, the 10 trades, 11 to 20, all of these. Now, each of these cell represents one trade. Each of the cells represents one trade. Green means profit, red means loss. All of you guys know now, profit is also happens, loss also happens. This is the fact of it. Okay. Now, that means the first 10 trades, how many greens are there and how many reds are there, guys? In the first 10 trades, seven greens and three reds. That means it has an accuracy of 70%. Accuracy of 70%. Superb. 11 to 20. How many reds and how many greens for the next 10 trades from 11 to 20th trade? 6 green, 4 reds. Hit rate is 60%. Accuracy is 60%. So, like this, if I do total 100 trades, at the end of 100 trades, I find sometimes 70, 60, 80. If I take the average of it, total is how much? Accuracy is 70%. The average accuracy percentage is 70%. That means out of 100, 30 times I was wrong, 70 times I was profitable. Are we clear? Out of 100 trades, 70 was right, 30 was wrong. Wonderful. Clear? अभी question is प्रतीक इसमें बड़ी बात क्या है? What's so great about this? Nothing great about this. It is what it is, right? But the reality is something different, guys. Okay, the reality is different. What happens in reality, and this is how a 70% accuracy can look like as well. Okay, so when you look at this, let me show you this. Hmm. Let What do you see here that is different from the previous one? What do you see here that is different from the previous one? Just instinctively. Correct? Streak of losses. Can you see that the losses are clustered together? Can I see that the losses are clustered together? Profits are clustered together, losses are clustered together. अच्छे दिन भी है बुरे दिन भी है correct. But can you see 70, 90, 60, 80, 30, 40, 30? On average, if I take the average after 100 trades, what's the accuracy percentage here? What's the accuracy percentage? 70%. What is the accuracy percentage there? 70%. So at the end of 100 trades, we are the same. But now imagine yourself, okay, in a situation where you trade first day profit, next trade you take loss, third loss, fourth loss, fifth loss. Do you think the sixth time you will trade or you will stop trading the strategy? Will you not stop trading the strategy when you see consecutive four times you have lost? Yes or no? Correct. Now, once you have done that, have you now realized that even though the strategy played out 70%, this is why 95% people will not even follow a strategy. So, hence, when people run after strategies, strategies are just some little part of the game. I will tell you, if I give each one of you the same strategy, you will not be making the same amount of money. Some of you will give up, some of you will not do, some of you will, play around with it. That is the reality. So, who is the enemy here? Is the strategy enemy or is it a mind who is the enemy? Is it the strategy who is the enemy or the mind who is the enemy? I'm telling you, when I started joined as a trader, there's a senior trader sitting beside me. We were trading the same strategy. He made all the money at the end of the month. I did not make money. Right? So that's where you have to understand the concept of probability. Listen very carefully. If you take a coin and you toss it, you say, what's the probability of heads and tails, guys? 50-50. But if I toss it only two times, both times can come heads now. Both times it can come heads, yes or no? So just because it came heads both times, will I say the probability is 100 and 0? Will I say the probability is 100 and 0? The probability is 50-50%. But for that probability to play out, I have to do it 100 times. I have to toss it 100 times. Only then will it average out. The probability will average itself out. Yes or no? Do you now understand that you can't judge a strategy by 1, 2, 3, 4, 5, 10 trades? You have to do it over 50, 100 trades for the probability to play itself out. It's simple math. You have to do it over large numbers for the probability to play itself out. How many of you just had a bulb on moment, just understanding this basic concept? That is the reality of it. There is nothing otherwise. If you're searching for some Aladdin's genie to come home, it's not going to happen. This is the reality of it. And I hope this gives you guys hope that if professionals can do it too, you can do it too. There's not some secret strategy that they know and you don't know. The only difference is you don't understand this game of playing, letting the numbers play out. Let me give you an example, okay? Um, Many of you know what SIP is, right? SIP? SIP kya hota hai? You guys know that? Yes, SIP. Now, what happens in SIP? Once you start your SIP, the money gets deducted from your account automatically. Yes or no? You set up one time and every month it gets automatically deducted on a particular day. Now, tell me something. And all of you know, right? People who do SIP at the end of the day, they make money. At the end of the day, they make money. You have not seen people SIP kiya hai and I'm making loss. Very less people, right? Unless they mess up something completely. But a lot of people who do SIPs in the long term, you make money. Now, the reason people make money is very simple. I'll tell you what the reason is. The reason is that because it gets automatically cut from your account. And if you had to transfer the money every month by yourself, you would not be making money in SIP. How many of you agree? If you had to transfer money, you will think, Ara, Trump is becoming attacking Iran. Market will come down. I will not buy this month. I will buy next month. Yes or no? You will come in between the market and the strategy because you are your biggest enemy. I hope I have been able to drive home the point. The point is not that SIPs are good and some strategy is bad. The point is you are letting it happen consistently. And by doing something consistently over a long period, the probabilities will play out in your favor. Okay? That is basically the game. Okay? So when I said, how many of you now believe that Pratik, like out of all the things that you have shared with us, this was actually like one of the biggest things which you could not think. I think this is very, very important, guys. I hope you guys understand it. Now, that brings me to the whole point of automating the system. Now, Pratik, Chalo, you have said SIP and all of the example. I understand this. But at the end of the day, Pratik, I am also human. When I see five consecutive trades are losses, thora to I will feel hurt, na. Little bit to I will feel hurt. I'm not a machine. I'm a human after all. I'm a human after all. So how do I eradicate this problem? How do I eradicate this problem? What is the solution, Pratik? The solution is very simple. The solution is to automate everything that you do not even have. Once you start the strategy, it should do buying, selling by itself. You don't have to decide, I will start, I will stop, I will do this, right? For example, when you're screening, you screen, you get a stock. Now, last 3 days, if you had losses and today you are saying that buy Tech Mahindra, you will not buy it, na? You will think, aaj nahi buy karenge, I'll buy it tomorrow. Yes or no? If you would have, made losses in the last 3 4 days, and today you got Tech Mahindra, you would have thought, forget it, man. I'm gonna wait for it. Let me see next time. Next week, dekhte hain. Right? So that is where we want complete automation. Right? When you want complete automation, you don't even want any input. Right? This is where AI powered trading comes in, guys. The future of trading, the moment all of you guys have been waiting for. Okay, this is where you let, not because it is going to do something amazing, but it lets you not come in between your it doesn't let your mind come in between you and the strategy. You understand the use case of it. Okay, so if you understood this, let me ask a simple question, Pratik. Why AI and why complete automation? Reason one is very simple. Reason one is removes all emotion. Now, by removes all emotion, I mean it can be anger, it can be also happiness. Because sometimes what happens, I don't know how many of you have seen this. Some of you, you receive a big bonus. Your office may year-end bonus you receive. Okay. And suddenly you feel like, oh my God, I have a lot of money. You go and you buy something risky. मतलब आज तो थोड़ा risk appetite बढ़ गया. Like you go and gamble. Now I can gamble with it because I have more money. Yes or no? How many of you have caught yourself doing that? Yes. Or if you had fought with your wife or husband, okay, and you come and take out the frustration in the stock. कि like आज तो मैं यहाँ पे frustration. I'm telling you this happens. We are all humans. And every time we do that, you lose money and you're like, what am I doing? Right? At that moment, you get carried away with excitement, you get carried away with anger, and you have to get. So you have to remove your own emotions from there. Okay. Now, before coming to the second reason, people are resonating with it like, Pratik, how do you know you have a camera in our house? It's just human behavior. So after so many years of learning myself and learning, teaching so many people, you just understand human behavior at this point, right? Uh, okay. Before going to the second reason, I want to tell you guys a quick story. Okay, a quick story to drive home the second point. Can I take 2 minutes? Can you guys listen a little bit? A little bit about to give you some context. Okay, so it goes something like this. Okay, once upon a time, in this bustling city park in the middle of a city, there was this old man who every day at 12 in the afternoon he would come to feed the pigeons. Okay, he had just retired. Every day, 12 in the afternoon, he would come to this one place and get a bowl of food to feed the pigeons. Now, at first, only a few pigeons knew about this old man's ritual. Every day, 12 o'clock, same place, same time used to come. Now, these birds who came in first, they benefited greatly from it. They started eating. They started, because there was not much competition. There was a lot of food. They became healthier, stronger, all of that. But what happened with time? The word spread amongst the pigeon community that boss, there's this one person who comes exactly at this time in this place with food. We should all go there. Free food, right? Why should we search for food? Now, with that, the birds who came in first, now more and more birds started coming. Now they had to share their food with the other birds, to a point where came a time where the entire park was just swarming with pigeons. Now understand, okay, this old man is a retired person. He is not doesn't have unlimited money. The amount of food he was getting on the first day for those five birds, he's getting the same amount of food for 1,000 birds. Now, but what is happening is that now the birds are having to fight with each other for the smallest grain of food. They are fighting with each other. Now, what some of the smart birds thought, boss, if this continues, we are going to die out of hunger. This is not done. Okay, we have to leave. They left this man. They searched around the city for some different place to find some food. It was a little hard for them, few days, difficult to find food. But soon enough, not much, they found a different person, which not many pigeons knew about it, and they started getting food there, eating, becoming healthier and stronger, while everyone, all the other birds, kept fighting among themselves for the smallest grain of food. With this little story, if you had to tell me one word lesson from this, what would you tell me? In one word lesson. One word lesson if you had to give me. Change, find a way out, smart, time, don't copy first, early bird advantage. Yeah, a little bit. Alternative, yes. Alternative, the answer is, guys, the answer is your reason to, and that is adaptability. The ability to adapt. Okay. The ability to adapt to change. Now, if, for example, if you are someone who is, in your town, you are, okay, let's forget about that. Let's just talk about, let's say, you are someone who has an IT job. Now, if every year there are 1 million people waiting to get the same job, don't you think your salary will be lower compared to a profile where there are less people trying to get that job? It's simple supply demand at the end of the day, also, right? It's just differentiating factor, right? And how you adapt to that change. So either you now get stuck there, or you increase your skills to adapt yourself, upskill yourself to be able to demand a higher salary. It's a fair game, right, everyone? Just the point is, in 2026 today, the way that the world is changing, every day there is something new. If we don't upskill, if we don't change with the coming times, you are going to be left behind. That's a fact. Before, there was change coming every 3 years, 4 years, but with time, do you see that the trends are changing like every, from yearly to month, 6 monthly to monthly, every trends are changing? Are you guys seeing that? Like, you'll have to adapt very quickly, especially with AI. You have to adapt very quickly. Otherwise, you get left behind. If you don't, no one cares, right? So, this is where we are coming from, being adaptable in the markets also. For example, this is an article from Money Control. This is an article from Money Control, okay? Which says the money making machines, algo firms make a killing. So, this is Graviton Research Capital, Alpha Gap Securities. These are two algo trading firms in India. Algorithm matlab automated trading firms. So you can see their FY23. I've taken even the recent one. If you check, you will see it's just growing. 3,500 crores of trading revenue, trading in the Indian markets. Now we all hear, right? Oh, people are trading is gambling, trading people lose money. But if they are making money, 3,500 crores in revenue, who are the people losing the money, guys? Who are the people losing the money on the other side? हम जैसे old pigeons, old pigeons who are fighting with each other for the smallest grain of food, where they have just changed their game. Okay, the rules of the game has only become different, and we continue to fight with each other for the smallest grain of food. Now we have to adapt to the changing times. We have to change our method. The next question with Pratik. Very good, Pratik. I agree with you. You are right. But these guys are hiring IIT graduates, computer science graduate, paying them 1 crore salary, 2 crore salary. I am an HR professional. I'm a pilot. I am a businessman. How will I do that? How many of you have no background in computer science? No idea what coding is, no idea what it is, no idea. Yes, a lot of people here with us today, no idea. So, Pratik, how are you telling that we will compete with these guys? Yes, it was not possible to do it 3, 4, 5 years back, but it is absolutely possible right now with the help of AI. With the help of AI, the coding part, computer science part is not required at all. Okay. Uh, I want to show you guys something. Okay. I want to show you guys something. Uh, okay. Okay. Let me do something. You guys know what historical data is? Historical data. Yes. How many of you don't know what historical data is? I think that's a better question. You don't know. All right. So, uh, similarly, past data. Okay, past data of any stock, data from the past. Okay, so you can find the data of the past from any stock. Now, uh, we all know that we can get the historical data from our NSC website, Money Control website. You can get the historical data from those websites. Now, manually you can get it. But what if there was a method of downloading, you know, historical data? What if there was a way of downloading historical data of any stock without writing a single line of code? Do you think you guys want to see how we do that? Do you think we can see how we will do that? Yes. Okay. Super. Super. Chalo. So I will be quickly taking you to my screen. Yeah. So we don't need this. So for this, we will be needing a prompt, and we will need any LLM model. Uh, what all do you guys know? You guys know ChatGPT, you guys know Claude, you guys know Gemini, Bing, anything. Okay, so anything that you please, we can do. Okay, so for now, I'm just going to use Chat GPT. You can use any Perplexity, sure. Okay, anything that you want to do, you can. Grok, anything. Okay, Copilot, sure. So we'll have to do very simple thing. We'll have to take a prompt. This is the prompt. We'll be sharing this prompt with you. Don't worry about it. So the prompt says, give me a code to download historical data of da 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 of this many years from this in the Excel format. I want the historical data in an Excel format. Copy it, go to your chat GPT and paste it. Okay. Now we have to change two things in the prompt. One is we have to change the name of the stock or whatever index we're downloading and the number of years. Okay. So let's first try to do it for Nifty. I will do it for Nifty, which is our index. I will then do it for any stock. We can do it for international stocks, Tesla also. Tech Mahindra, कुछ भी कर सकते हैं, कोई problem नहीं है. Okay. Okay. And how many years do you want to do it for? 2 years, 3 years, 5 years, 8 years, 10 years? 2, 2, 5, 10, 20, 20, 22, 8, 8, 5. Acha. Okay. 5. Let's do it for 8 years. I think 8 years will consist of a lot of periods. So let's do it for 8 years. Okay. Good round, even number. Let's do it for 8 years. Okay. Um. Okay. So, guys, are we clear? What are the two things that we changed? We changed the year and we changed the what are the thing that we got. Okay. Clear till now? Why finance is Yahoo Finance, guys? There's no typo. Okay. There is no typo. There's no typo here. This everything is completely as I want it to be. Okay, are we clear? Okay, till now super clear. We have copied the prompt, pasted the prompt, and changed two things. One is Nifty, and one is how much years do I want it to be. You can do it in anything. You can do it in a free version of any chat GPT. You don't need a premium one. Okay, Then simply you run it. Okay. Once you run it, you will be getting the code for it. Are you seeing this? You're getting the code for it. Code for it. Simple. Till now, we are with me. We have run the prompt and gotten the code for it. Now, after getting the code for it, what are we going to do? Okay. What are we going to do? What are we going to do with the code? Very simple. We are going to run the code somewhere. For that also, we have something very simple. We will just search for Google Colab. Okay. We will search for something called Google Colab. You see the first article, that first link that comes here in Google Colab. Following me till now, everyone? You just click on it and Google Colab is going to open for you guys. Very, very simple process. And Google Colab will going to open. So very simple. Search for Google Colab. First link, Google Colab. Open it. You need a Gmail account. Everyone can open a Gmail account. It's free to use. No problem. Are we super clear till now? I am taking it very step by step. Everything we have done is in a very similar process. It's not nothing. No one can do. Everyone can do this. Okay. Okay. After doing this, can you see the connect button here? Connect. Connect. Just click on connect. Okay. Click on connect and you will see connecting to Talata and you will see connected. Okay. So it is connected and the green tick button is connected. Now we'll just have to come and paste this code that we have and paste it here. So we'll do the plus code thing. We will go to our code, copy the code and paste it here. Clear? We have copied a simple code and pasted it in our Google Colab without any complication. Very simple. We will click the play button here, which is the little play button here. We'll click it. And once you click it, you should be able to see that it is saved, one of one completed. We have Nifty CSV file. We will download this file. And once we download this file, we'll open this file and we will have the Excel sheet. Okay, so let me just show you the Excel sheet once it opens. Can you guys see this? From 18th Jan 2018 to 14th Jan 2026, we have 8 years of data with us. 8 years of data for Nifty, all downloaded in Excel sheet without having to write a single line of code. Did we write a single line of code till now? Nothing. Okay. Now I have done this. Do you guys want to do it for? Okay, let's do something. Okay, let's do it for some other stock, but let me do it. Just watch it, and I'll do it all over again and see how long it takes. Okay, let's do it. Okay, so I'm going to copy this prompt, go to my AI LLM model, paste it, and I will change it to what stock do I want, guys? Tech Mahindra, BSC, TechM, Wipro. Chalo, TechM. TechM, Tech Mahindra. Okay. How many years do I want it? 1 year, 2 years, 3 years, 5 years. Let's do 5 years. Okay, let's do it different 5 years. That's it. Can we understand now? Tech Mahindra for 5 years. We will run it. Yes, US stocks also possible. Absolutely, US stocks possible. So we are getting the code for it. Very simple. Once you get the code for it, copy the code, go to Google Colab, uh, get a line of code, paste it, run it, and you should be getting your TechM CSV file here. Download the file, and you should be able to get your 5 years of Tech M historical data. Do you guys see this from 2021 to 14th Jan 2026? How easy was it? Change two words, copy, paste, change two words, and you have historical data for any stock in the world. You can get the historical data for. Can I get a awesome in the chat if you think that this is the power that you get using AI, which nowhere else you can find? You didn't have to write a single line of code. Everyone, each and everyone can do it. These are steps which if we'll be giving you a document with the steps, okay? So don't worry about it. These steps, once you get used to it, you'll remember it. But you don't have to learn coding for you to be able to do this. That's the point. You don't have to learn coding to be able to do this. Okay, so you can download anything like this for yourself. Now the question is, Pratik, what do I do with this data? What do I do with this data? Yes, now we will be exploring how to play around with this data. A lot of it using the power of AI. There are endless possibilities that we are going to do, but that we are going to cover tomorrow in our complete AI using. So we'll be taking this sheet and exploring this sheet using the power of AI. Before that, can we quickly go through what are the things that we have covered till now? All of you, can we quickly go through what are the things that we've covered till now? Yes? Okay, perfect. Okay. The first one, using technicals like a pro. How many of you know remember what do the professionals do that differentiates them from the retailers? They use something called layering and probabilities. We talked about the three layers. What are the three layers? Breakout, volume, twice the average volume, and third one is our RSI. We have learned how to build the scanner. You'll be getting the document of it. We have understood killing the risk. How many of you found this awesome? How the 70-30 rule, that is completely something that I hope a lot of people had a revelation today. And I also showed you how you can automate and why do you need to automate all of this for yourself. Now we have covered a lot of things, and but what is very very important is that when you have a strategy like this, when you have um, a fixed way of trading, when you can consistently generate some returns for yourself, it's not only about making money, but it's also about learning how to grow that money and to protect that money. Have you guys seen, like, think of it, okay? So there is, you attach a pipe to your nozzle, okay? And there is a lot of water flowing, full force water is flowing, okay? So think of the water as money flowing, okay? But if there are leaks in the pipe, what is going to happen? What is going to happen if there are leaks in the pipe? There's going to be waste. Okay. So a lot of people, even when they have figured out a way to earn money, for example, a lot of people may have maybe making a lot of salary, but you feel at the end of the month you still don't have enough money. How many of you feel that? Like you make decent salary, but at the end of the month you still don't have enough money because of those leakages. Now that for that you have to understand what financial prosperity looks like. Okay, for that I would absolutely love to give it to Rahul, who is going to come and help us go through what the path to financial prosperity looks like. Rahul, over to you. Yeah.
Yep. First and foremost, thank you so much, Pratik. I was completely glued to my screen. And you know what, guys? Type in a easy if you loved Pratik's explanations, right? I think, teaching trading is not something which comes naturally and it is not easy to understand usually, but Pratik has a knack for it. Did he make it absolutely simple? Gave you realistic expectations, right? By including concepts of probabilities, layering, how to make it smarter, and how to make it logical. Yes, yes, easy, easy. Perfect, perfect, perfect. And I think that has been a constant endeavor of Pratik and mine across the 4 days, and especially across the last 2 days, yesterday, today, to try and make it easier for you to comprehend, because we understand that there is always a cloud of uncertainty or opaqueness when it comes to the markets, when it comes to trading, and when it comes to investing. But as I said yesterday, we finance professionals, we intentionally do it, I feel sometimes, and I think Pratik will agree with me, that we try to make it complicated so that we can validate how smart we are. But rather than that, I think we wanted to just break it down for you, make it absolutely easy to digest, to understand. And of course, why are we teaching you? So that you understand this, so that you are able to use this in your day to day life, right? And that has been a constant, endeavor of what we have been doing across these 2 days. Teaching you frameworks, teaching you logics, teaching you how the market mechanism works, how the market, the securities in the market operate, so that you understand where you are starting from. That's, I think, something very, very important. And kudos to Pratik for explaining something, which takes years to learn, but absolutely breaking it down into digestible bits for you. But tell me something. I have taught you around four frameworks yesterday. I have taught you an AI tool. Pratik has taught you so much today. But why are we actually learning about all this? Why are we learning about the basics or the frameworks or the logics that operate in trading, operate in investing? What do you think? What is, the rationale behind learning, trading, and investing? Financial freedom, to earn more. See, earning more is a byproduct if you do it correctly, if you learn well, if you do it well. Well, I can summarize it as to learn how to get yourself on the path to financial prosperity. Can I say that? I think there's no shame in saying that everybody wants to be prosperous in their own way, especially financially, because everything that you do has some financial aspect to it, right? Let's say your job, let's say your expenses. Why are you making expenses? Because you want to achieve, uh, you know, do the needful, correct? And that has a financial cost associated to it. That is why you need to work so that you can have some financial attachment, correct? But tell me something very honestly, that is a constant endeavor everybody has or everybody wants to have. There's a big difference. Now, tell me something. How many of you have actually heard from really financially prosperous people discuss the steps with you? Now, don't get me wrong. All the YouTube influencers or finfluencers that you see, and I don't want to name drop anybody, but you will see that, I'm a trader, I'm driving in a Ferrari in Dubai. Uh, do you think that's valid? That's actually real? No, because these are influencers, they get paid to run all these reels. How many views their reels have, how much engagement their reels have, it is a cost. They rent out a Ferrari, they buy flight tickets so that they can show you that life. All of us, we watch it, and because we're generating views for them, that is how they're earning their income, correct? So don't get carried away by everything that you see. But actually, I'll tell you what, really, really financially prosperous people know, they'll be standing beside you and you wouldn't even get to know, right? Because they're really private people. Now, to understand this better, how many of you think that, your salary is not enough? Whatever you're doing in your life is not enough. Do you know why is that? Because we are always constantly comparing ourselves with other people. We see somebody, if you have a 3 BHK, somebody else bought a 4 BHK, somebody else bought a duple, right? I have seen legitimate posts where people, you Reddit posts or, interviews where people are earning 5 lakh, 7 lakh rupees a month, and they are saying, you know what, I don't have anything at the end of the month. I'm now in debt. If you tell this to your parents, they'll be like, what? I have you gone crazy? 5 7 lakhs, but that is what the situation is. We are chasing consumerism, right? We want to achieve everything with the small, salary that we make. We want to purchase everything, but nobody is truly building assets. Now, you tell me something. When you retire, right? Is your Audi going to help you? Is your BMW going to help you? Is your 5 BHK house in a swanky property help you? Is all your international travels that you took, that you did by taking a personal loan so that you can show it to your friends and family, is that going to help you when you have not saved anything at all, when you have not built real assets? And that is why there is a fundamental problem in the day and age. Me personally, I don't have a problem with consumerism, because if there are consumers, they're driving up the stocks that are catering to them, and I can invest in them smartly. But I have a problem with it as a way of life, right? Always live within your means, rather be, below your means, and plan and prepare for the future. Our parents also used to earn decently in their own capacity, but they always did one thing: they built for you. A lot of what wealth people have today is ancestral wealth. If your ancestors had done the same thing, taken international trips by, emptying their bank account or taking personal loans, we would have had nothing left. Correct? So that is why understanding what financial prosperity is important. You need to go back to the ground level and fix it. Don't get, influenced by what you see around you. Correct? And I think, in my own experience, I would consider myself as financially prosperous. I'm thankful to God, my parents, who have given a lot of effort in my upbringing, my education. And would it be okay if I, in all my experience dealing with clients, talking to people who have actually achieved it in life, my personal experience, would it be okay if I share a few things that actually, anybody should be doing to correct their financial decision making? Would it be something that you are open to learning? Again, it is not only always about trading and investing. Financial discipline goes, needs to be addressed before that. Okay. So there are three key principles that I want to share. First is to trade with your job. This has worked for me, and it can be anything for anybody. And what is the basic requirement, right? What are we trying to achieve? Is to have an additional, potentially have an additional source of income, right? Potentially have an additional source of income. Let's say all of you are in your careers, right? Can you do two jobs at the same time to enhance your income? Of course, you can moonlight, but don't do that. I think people are getting caught left, right, and center, right? Can you do freelancing? No, because if you're in a full time job, it is very difficult to do that. I believe trading is something, if done right, it can be a very good avenue, right, to enhance one's income potential. So, that is, I would say, the first principle. Can I have a K1 in the chat if you have understood the first key? K1. Okay? It can be anything, any additional source of income, but in my experience, the stock markets are for everybody. Okay? So trading, definitely the first thing. Second is to clear your loans fast and invest that extra money. Please, if you are, taking debt left, right, and center just for consumerism, stop that. If you have it outstanding, please get away with it. Get out of that trap before it becomes difficult to get out of that trap, and get into the habit of investing, get into the habit of creating assets for yourself which you can depend on down the line, in future, when you actually have a need. Focus on growing your assets, becoming debt free, grow money. It's like a, prepayment hack that we learned, right? The prepayment hack. Again, of course, if you want to go for a house or a car, you take a loan, but you do it smartly so that it doesn't become burdensome for you, right? So the next key principle, as I said, is to grow your money, to get yourself out of unnecessary debt. Can I have a K2 in the chat if you understand this? K2, K2, K2. Perfect, perfect. And what is the third thing? What is your guess? Of course, one should always strive to enhance their income. One should always try to grow their income. What do you think is the third step? Is investing comes into growing money only, right? It is to correct. I saw one correct answer. It is to protect your assets, protect your income. Knowing the concepts that the top 1% people know, there are many things that these really wealthy people do in order to be able to protect or keep their money. right? Now, why is it important? I'll tell you something. You make a lot of money and then you burn a lot of money. Are you any better off for it? No. You need to always be protective of your capital. For example, take the Ambani brothers, okay? Take the Ambani brothers, Mukesh Ambani and Anil Ambani. They were handed over an empire. And look at what happened. One brother was able to, build 10x or 20x or 30x from that. And the other brother is, struggling with bankruptcy, partial glimpses of, let's say, a revival, but then again, back to the bottom. Because it is, difficult to make money. It is difficult to grow money. It is even more important and difficult to keep money. Okay? How many of you know about Michael Jackson, by the way? Before he, of course, he passed away, there was a point in time when he was at the peak, at his peak, right? He was worth more than $100 million back then. What happened after that? What happened after that? He got bankrupt. So again, you need to be making money. Yes, very, very difficult to keep money. Of course, if I'm taking so much of pain and effort to build something, you need to take even more pain and effort to grow it, like to grow it and to keep it. Makes sense? Like Byju's, right? I don't know what went wrong there. I don't want to get into the details. But for example, one smart hack. Let's say how many of you're aware of FDs, right? I taught you FDs. What is the average return on FDs, by the way? Tell me. We discussed this yesterday. Around 7.5%. Correct? Let's say 7%. Okay? Now, how many of you know that the FD returns are taxed as well? Yes. So if let's say you are fortunate enough to fall under the 30% tax bracket, then you are unfortunate enough to pay 30% tax. Correct? So adjust for 30%. How much does 7% FD return come to? 4.9. Correct? Now go back to what we learned about inflation yesterday, cost of living inflation. 8.4. Does it make sense? Now there is another smart hack over here. Correct? How many of you know that there's something called as an arbitrage fund? Let's say in the chat. Have you heard of these funds? Now, what do these funds do? They basically see, you have heard there are multiple exchanges, right? Then there is NSE, there is BSE, there are multiple exchanges. What they'll do is they'll see if there is a mispricing between the same stock in two different exchanges, right? If let's say stock X is at 100 rupees in one exchange, it is at 98 rupees in the other exchange. What they will do is they will buy at 98 in one exchange and they will sell it at 100 in the other exchange. So these arbitrage funds also on average have given around 7-8% returns similar to FDs. But now comes the interesting part. Tax. If you are holding this fund for less than 1 year, what is the short-term capital gains? Let's take 7% only. What's the short-term capital gains? 20%. So kitna aaya? 7 minus 20%. It is still how much? More. Okay, 5.6. Now, if you hold it for more than a year, which ways people do FDs for more than a year, how much does your long-term capital gains come to? 12.5. Correct? So you're still making around 6.4, 6.5 percentage. Then you have an LTCJ exemption as well of 1.25 lakh rupees. Correct? So now do you see what are the different smart hacks? Same amount of money, but now you're becoming smarter about taxes and everything. So that is why the third key principle to grow your money is very, very important. Can I have a K3 in the chat if all of you understand this? K3, K3, K3. I know after today's call, all of you are going to go and look at arbitrage funds. Perfect. But tell me something. Is financial prosperity the end objective or is it the means to an end objective? What do you think? Type in end or means. Means, right? What is it a means to? It is a means to a path to a fulfilled life, right? The objective is to have a fulfilled life. Now, this can mean anything to anybody, but to have contentment, to be secure, to have financial security, to be content, to be at peace, right? And what is the fourth key that helps people achieve a fulfilled life? What is the fourth key? Any guesses, guys, in the chat? Quickly, let's see. I got my right answer. Absolutely correct. The time to spend that money. Because, for example, let's say somebody has 100 crores and he's working 18 hours a day. Can that somebody actually enjoy that 100 crores that they have built for themselves? No. Can they enjoy it, share it with their family? Can they share it, let's say, do anything with it? Can they do charity with it? No, they can't. They can't escape it. So again, time is a luxury we should absolutely prioritize. That is the fourth key. Drop in a K4 in the chat if you have understood of all the key principles that you need to have in your journey. Yes, in a path to financial prosperity and for a fulfilled life, this is something that is non-negotiable. Correct? And believe me, once you master everything, you really differentiate yourself from 99% other people out there. Because I have already explained this to you. Their mindset is only different. They are in a constant corporate rat race. They're living paycheck to paycheck. Unfortunately, even at very high salaries, they are doing paycheck to paycheck just because they don't have simple financial discipline. Even if somebody has a 1 crore 2 crore ka package and they don't have financial discipline, which most people don't have, by the time they retire, they will still have to go for jobs so that they can sustain themselves in retirement. And believe me, I know of somebody, government employee, retired and everything, never invested, never did anything, never made proper financial planning, and now he's having to work again so that he can sustain them, right? So you will be setting yourself aside from 99% other people just from a mindset point of view. And you will be able to become that 1% of the people who are a rarity in today's day and age, who understand the importance of financial discipline, security, and independence. Understood? Yes. How many of you would like to be this in this 1% people? It is going to be difficult. It is very difficult to look at reels. अरे साल में 3 international trip मारा. It is very difficult not to take a loan, not to uselessly spend your money, be mindful and not do anything, and rather put that money in a boring, investment option, which you can't even put up in your Insta reel. But this is what is going to help you in the future. This is what is going to help your family, secure your family in the future. Correct? Right? Now, just you know what can it enable? What does financially prosperity and freedom actually look like for people who sacrifice their present for the betterment of their future? They don't do unnecessary spending. They're mindful. It can enable them to do any the core desires of life, right? The core goals. It can enable them to retire early, quit their job if they want to. It can enable them to buy their dream house or car with proper planning. Provide for the children the best education. Again, best thing that you can do for your children, give them the best of education. Thankfully, my parents were doing it. They fought a lot, faced a lot of hardships, but they prioritized it, and I'm all the more better for it and happy that they did it, right? I'm very grateful to them, right? It can be to go on multiple family vacations, planned. You plan for it, prepare for it, invest for it, and then go. Right? Give your family the best life. I think that is something everybody wants to do. Give back to their family for whatever they have done. Right? Clear your loans faster. Very important. It's a headache. People are noses down in this down in debt. And it can be to truly do what you want, not just the things that pay you good money. Correct? Now tell me something. I'm asking again, do you want to learn how to take better care of your finances and work towards building that financial discipline? Now, I went through all of your attendance forms yesterday, right? And I saw a very important thing, and especially people in the 30s, 40s, 50s. You had a very common question: is now too late? Well, you know, it's never too late. Nothing can be done about why did we not start earlier. What is the solution, guys? It's to start as soon as you understand that you need to take action. And I would like to think that with the right learning and mentorship, you can start your journey at any age. Do you agree that, if let me know if you agree that Pratik and I have to been able to break down the complex financial topics for you, the instruments for you in these 2 days. So again, yes, thank you so much. Thank you so much for the appreciation, guys. Now, I would ask you one really, really interesting question. Okay. How would it be if there was a mentorship program beyond the 4 days of the FFA in which you learn absolutely everything to start your journey towards financial independence? And by absolutely everything, I mean absolutely everything. The path to financial prosperity and a fulfilled life, to have potentially earn more money, to potentially grow more money, knowing that, hacks to keep more money, and of course having the, fulfilled life to spend that money as well. Drop in a beyond in the chat if you would like additional learning after the 4 days of FFA as well. Drop in a beyond. Oh my god, my chat box is absolutely flooding. You know what, let me show this to you. Let me show this to you. Just a second. This is what my chat box looks like, guys. This is what my chat box looks like. Amazing. 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 I'm still getting beyonds. Well, you know what? That's really, really heartening to see. Just a second. Okay. Perfect. 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 And you know what? So, in this 4 days of the FFA, let me tell you one thing. In the 4 days, we are super, super glad to have you with us, right? Approximately 2,800 people in the call right now with me. I hope it has been valuable for you, at least till this 2 days. And you know what, take it from me, we are going to deliver even more value across the next 2 days as well. Do you think that we'll be able to give you more value, more knowledge, more understanding of how the markets work? And we would love to guide you, handhold you, mentor you even beyond the 4 days. But there's a problem, with 2,800 people, so many questions. Even though we would like to address each and every question individually, it's physically not possible. Correct? It's actually not possible because before I can read a chat, it scrolls, right? So again, so that is why we have, something called as the inner circle, right? Where when we only take in 100 students, we provide them guidance, mentorship, and hand holding, right? We have approximately, 13 mentors who will teach them, right? And that is what I want to give you the opportunity for today, beyond the 4 days of FFA as well. Excited? Yes, yes, yes. Perfect. Amazing. So, this is our Legacy Wealth Builder life coaching program, right? It is conducted by Pratik, me, 13 other mentors, right? So that we have a healthy student is to teacher ratio, correct? And it is going to be all about the world of trading and investing simplified for you, broken down into simple, simple concepts for you. Now, about the details, I'll come to that. How many of you want to be part of the inner circle program? Me. Okay, okay, that's a lot of you. So I think I can take it that Pratik and I have been, good at our jobs at explaining, because so many of you are dropping in me's in the chat. But I'm sorry to say, as I said, we cannot take all the hundreds of you who are typing in me in the chat. We, as I said, only have 100 seats, and you need to qualify to be a part of the top 100. And how do you qualify? You need to apply for it, correct? Because We only want people who are really truly committed towards learning and working towards their financial goals. We have 100 seats, correct? I don't want somebody to just, apply for it on a whimsical note and then leave. And somebody who actually wanted to learn it, they miss out. So, what Pratik and I we have decided is we will roll out an application form. We'll go through your application, and you need to be applying for it to be a part of this 100. Okay. So, how many of you want to be an applicant to learn everything about equity, stock market trading, FNO trading, investing from us to start working towards your financial goals, independence, and security? By the way, as I said, this is suitable for beginners as well as experienced professionals. And as you also know, Pratik and I, we have our own SEBI registered entity, Springpad Wealth Solutions. You get buy sell recommendations from there as well. Yes. How do you apply? Just give me a moment. I'm coming to that. Sorry. So, how you apply is you can go ahead, scan this QR code, or click on the link that the team will be sharing in the chat, LWB apply. And this is how the form will look like, right? So, before I take you through the form, just open the form. Before I take you through it, all of you who want to apply, just scan the QR code or click on the link, have the form open, and I'll take you through it. Don't fill it up before I take you through it. Okay. All right. Okay. So as you can see, here's the form, right, to apply for the LWB program. Now, very few simple details: your name, your date of birth, your email address. Well, that's very, very simple. And then there's a question: as per yourself, have you achieved financial independence and security to fulfill all your goals? Right? I know for majority it will be no. If yes, you can drop in a yes. Now, if you have selected in a no in the above question, then drop it in the form that what is stopping you from achieving financial independence and security to fulfill all your goals, right? It can be anything, right? It can be like, let's say, lack of knowledge. Okay. It can be misinformation also. I know, as I was seeing while Pratik was asking, a lot of you have actually burnt your fortunes because of misinformation and guidance from all these telegram channels, and so that I don't want to go there. Absolutely a disgrace, all those people. Misinformation, it can be lack of implementation clarity. Okay, it can be any of these things. Let us know what has been the blockage for you. Okay, can I show the QR code? Yes, here's the QR code. You can also click on the link in the chat. Okay, done. Okay, now course details and everything. I don't want to spill all the beans. We'll be discussing all of that tomorrow in day 3. But first, you need to apply to stand a chance to be in the top 100. Okay. First, let's go through the application. Okay. Now, if you have selected yes, that you have achieved your financial independence, you just let drop in over here. At what age did you achieve your financial independence? Right. And when were you able to meet your goals? Yes, if you are from the US, that also works. Not an issue. Now, over here, it's where it's very, very important. I really, really can't emphasize this enough. You know, I I know Pratik and I, we have been doing our best to simplify it, the markets for all of you. But, right, you actually need to be really, really dedicated to do it properly. So let us know, do you have a whatever it takes attitude to learn the concepts and frameworks of trading diligently and are ready to put in your work towards building a healthy financial discipline for the future, right? And be very honest filling out the form, right? The next thing, again, very, very important. Why do you want to join the LWB program? It could be any of your goals, right? It can be basically to quit your job, have an early retirement, buy a house, potentially enhance income, achieve financial security in retirement. If you're somebody who's retired, provide for yourself or your family, etc. Whatever your goals are, whatever you want to learn, and then take help from of the program, drop it in over here. Let's say it can be to achieve financial security. Okay, achieve financial security, or to know how to properly, you know, go about financial planning. It can be any of these things. Let us know in the chat. Then why, just let me know, why do you believe Aditya, Pratik, and me are the right mentors to help you achieve your goals? Correct? Why should we select you for the LWB Inner Circle program? This is where it is very, very important. Think of it as like a, admission letter. Why, we should take you rather than anybody else? Why should you be shortlisted rather than anybody else? Tell us about your background, your problems, and of course, your willingness to learn. Take some time, take a couple of minutes, don't give a one line answer. Actually put in thought and effort into writing this, because Pratik and I, we're going to focus on this the most, right, when we are going through all of your applications. Correct? Again, you can let us know what is your monthly income right now, and how much do you aspire to increase your income by on your journey towards financial independence. Correct? So drop in that as well. Also, let us know how many years of trading experience do you have, and drop in your WhatsApp linked phone number, because the team will be sending out, right? The team will be sending out the notifications over WhatsApp itself, whether you have been shortlisted or not. Got it? So I will set up a quick 3-minute timer for all of you to fill out this form, right? This form will not be shared outside the call. You only have access to fill the form right now on the call itself. I've started a timer. If you have any questions with respect to the form, you can let me know. Filled, by the way, once you have filled out the form, drop in a filled or the in the chat. Drop in applied in the chat. Okay? Drop in applied in the chat. Applied, applied, applied. Perfect. It's amazing to see how many are applying for this. Let me show you how many of you are applying for this. It's My chat box is continuously flooding with applied, applied, applied. Oh my god. Show QR, just a second. Yes. Applied, done, applied, applied. I think Pratik and I are going to have an all-nighter if we have to go through so many applications. But it's good to see that all of you, in all honesty, I'm happy to see that all of you, understand the importance of having financial independence, security, and structure in your life. Because, God forbid, all of us know people have stopped thinking about tomorrow. They are living in denial. They're living in the moment, but that is not going to help out in the future. One big health risk, something bad happens, and you have nowhere to meet it. QR, yes, guys, this is the QR over here. Okay. Can I fill the form later? No, you can. You have to fill the form. We will not be sharing the form in the WhatsApp, because see, people who have not joined, not taken out time to attend these 2 days, they should not have the option to fill out the form as well. You guys are here. You're putting in your time and effort to understand, to go through the sessions, right? That too on a Friday night. So you all definitely deserve to do this. Submitted, submitted, done. Perfect. What are we going to learn? See, the program details and everything. We have 2 more days. We have a lot to teach you. We'll be discussing all of it. I don't want to spill all the beans. Don't ask me too much, because I have a bad habit of spilling the beans. Okay? I don't want to do it. But we'll be discussing all the details of the program and everything, what you're going to learn, what you're going to get, what is the course framework, everything we'll be discussing tomorrow in day 3 of the FFA program. Are we done for today? No, we are not done for today. I'll have to give you the resources. I'll have to take your attendance. But first, let's do the most important thing at hand. All of you who have dropped in a beyond, who have dropped in, an interest, please go ahead, fill out the form. Done with complete honesty? Yes. Very, very important, because don't make life difficult for Pratik and my. It's already a difficult job, to weed out 100 applications out of so many. My apologies. I wish we could have taken more than 100, right? But unfortunately, that is not possible, because we won't be able to, properly guide you, attend to all of your individualistic questions, or help you with it if we have so many people, right? We are trying to do our best across these 4 days of the FFA, but really, really intrinsic topics and complex topics. It requires doubt solving. It requires more time and effort, and we don't want to skimp on that. Correct. So I'm sorry, we only have 100 seats, but yes, uh, don't worry, Pratik and we are ready for an all-nighter. You can fill in your forms. We'll go through all of your responses. Okay, okay. You can fill in later if I copy the link. See, the team will be closing the link after the call. Okay, so sure, you can copy the link, but again, if you actually have an intention to fill it right now. I'm waiting for all of you, right? What is your opinion for intraday? There's no opinion, right? For some people, intraday trading is how they go about trading. Some people prefer to take more time, do it over, let's say, 2 3 days or weeks. That is what we call as positional trading. So that is how it works. Okay. If I'm 55 years old, can I join? Absolutely yes. Absolutely yes. As I said, right, age is not a bar. We have had people over the last 4 years that Pratik and I we have been conducting this program. We do it once a year. We have had people who is 83-year-old, 87-year-old as well, and they still have the hunger to learn and improve and deploy. And believe me, they're one of the best students that we have had. It is surprising to see that with 83 years of wisdom in their belt, they still come hungry to learn and hungry to implement. And that is wonderful. Now, I hope at 83 I can be like them, right? And if you're overseas, that is also not a problem. We have people from all over the globe, be it the US, the Middle East, Australia, the UK. We have people from all over the. See, because knowledge is not, it is not something which can be enclosed by geographical borders. Knowledge is for everybody. The how the market mechanisms work, how the instruments work, it is for everybody. Correct? Gift Nifty, yes, that is another option. Absolutely correct. Correct. Okay. While all of you are filling out the form, let me quickly take you through what we have done today. All of you, the form is still open. You can refer to the links in the chat. I'm just moving ahead in the slides. Okay. So let me quickly summarize day two for you. What have we done? Okay. Let me do the summary and everything. Then I'll share the attendance. Right. Okay. So day two summary. First and foremost, what did we learn? We learned and understood how a breakout works. Yes, yes, breakouts. We learned, saw accurate backtested results of how trading only breakouts does not help. Do not blindly listen to news or misinformation. Sirf breakout ho raha hai, that does not work. Have you seen that? We have done a backtest ourselves and seen that it does not work. But then we saw how layering and probabilities significantly increases your framework's returns with backtesting. Yes, any framework, the more layers you add, the more probabilities you are stacking up in your favor. Then we learned the three layers of breakout plus volume plus RSI to generate smarter backtested results. Did we learn that? Yes, correct. Then we understood how a backtested 30% CAGR per year trading system works logically. See, don't always focus on the numbers. That is something Pratik has told you. I have told you. Don't focus on the returns of a backtested framework of a strategy that we have been, or a logic that we have been doing. Understand the why and reason why we have built a logic of, a particular way. That is what will enable to start thinking on your feet yourself. And that is exactly what we want. Correct? We built an exact back-tested system for free on a portal with our personalized requirements and customizations. That is something we did. We put this logic into a portal that filters on everything for us, which is charting, right? Then we learned how a stock option logic works just by using RSI innovatively. Very, very simple concepts, but if you use it the right way, right, it can do wonderfully, right? Then we uncovered the hidden truth of stock markets, the 70-30 split that no one else dares to speak about, the 70-30 journey. All of you understood? Yes, it can be different. People get disheartened if I see 2 3 days of losses, but you have to always, as a trader, if you ask any trader, they look at it holistically. If they make a win, it's part of the business for them. If they make a loss, it's part of the business for them. You do not marry, you know, to the concept of accuracy every day. Never get into that pitfall. Okay. And last but not the least, we discovered the power of AI. How did you love it? The AI in trading. Loved it. And that was just a little bit of a trailer, right? And we also understood the three keys on the path to financial prosperity and a fulfilled life. Okay? That was not to do with trading and investing, but I think it was important. I couldn't have taken day two without discussing, the right personal finance concepts with you all. It was my duty to do it, and I'm happy that I did it. And I hope you are happy that you learned what is important in life. Okay? Madhuji says it's really important for me. Yes, absolutely. Absolutely. Thank you. And then we have day three, which is AI powered trading. I don't want to spill the beans myself of what you're going to learn tomorrow. Pratik, do you want to take them through it?
Yes. So what we are going to basically be covering tomorrow is we are going to learn how we are going to supercharge our AI trading with the power of AI. Then we are going to go to the next part that we are going to learn how to build a trading strategy using it. Rahul, if you can just forward the slide, please.
Yep, yep.
Uh,
Just a second.
yeah. And after we learn to do that, we learn how to backtest strategies using AI. And of course, we are also going to learn how to completely automate the entire trading process using AI. And of course, we have some amazing bonuses and things that we also want to share with you, plus the attendance. Okay, so that is going to be the agenda for tomorrow. The agenda is completely everything to do with AI. I have given you guys a glimpse into the world of AI, and I know a lot of you are superbly excited. So, all that we did today, the sheet, we are going to use that tomorrow as a reference for us to be able to start going deeper into AI automated trading. Sounds like a plan, everyone? Fixed your calendar
Perfect.
date tomorrow at 7. So we're going to start at 7. So 6:45 is the time that you join. Get your water bottle, snacks, whatever that you want to do. And yeah, I'm very, very excited. I think today was amazing. And more tomorrow is going to be super, super amazing also.
Okay. And I was, Pratik, I was actually loving the everybody's replies in the chat. Let's do one thing. Okay. How many of you, let me take a video of all your reactions and we'll be sharing it in your WhatsApp so that you can also see how my chat box looks like, right? How many of you loved day two? Let me see it in the chat. How did you love day two of the FFA, guys? Yes, me, mind blowing. Loved it. How many of you are super, super excited for day three tomorrow when we are going to learn AI in trading? Excited? And yes, the surprise bonus as well. Amazing, amazing. Loving the energy, guys. You know, thank you so much. Thank you. I'll be sharing this in the group. I'll ask the team to share this so that you know, what my chat box looks like. It's amazing. Okay. Okay. So quickly, let me share the resources for uh, today with all of you. Okay. So this is the link. You can scan the QR code for today's resources, everything which Pratik has shown you today. I'll just quickly stick around in the screen. All of you scanned it. The link is also there in the chat. Okay. Okay. So this is how the resources looks like. If you scan the QR code or click on the link, this is how the page looks like, right? The charting bearish guide, the charting bullish guide, the FFA day 2 resources again, it's there itself, and the prompt to fetch all the data. So everything over here, if you click on it, you'll find everything. Okay? The entire guide, it is, as you can see, it's step by step, everything is mentioned over here. Okay? The prompt is also over here. Got it? So again, this is the QR code, and the team will be sending the link again in the chat. Kanish ji, point noted. Thank you so much. Thank you for putting up so much, you know, filling up the form diligently, the application form. Thank you. Thank you. Resource link, again, this is the resource link. All of you have access to the resource link. Okay. Yes. Okay. By the way, if you guys missed out on the resources for yesterday, I'll be sharing the day one resources again over here in the chat. The team will be sending the day one resources again in Zoom as well. Okay. If you missed out on yesterday's resources, here it is. Okay, guys. Okay. This is where you find the resources. All right. So the team will be sending the links. And just I wanted to say in the meantime, uh, you know, you can be an applicant over here. You can scan this QR code. We still have the form open. If you are still filling out the form, we are keeping it open till the call is there. And by the way, out of approximately 2,800 people, do you want to see how many of you have already applied for the form in this last 10 minutes? Let me show that to you. Let me show that to you. Just a second. Let me open up the form. Almost 1,500 people have already filled out the form, right? So, Pratik and I, we are going to have a tough time tonight going through all this. But yes, we are very, very happy to do this. My timer has already run out. No worries. But you know what? If you have, uh, you're still filling out the form, let me know. I'll keep the call open and the form open. Okay. Filled. All right. Somebody says share the link with me. I'll help filter. That's a good one. Okay. All right. If you have filled the form, if you have taken all the resources from today, day one and day two, you can drop off the call. I'm just keeping the call open for another 5 minutes, and I'll wait for the rest of you to fill in your forms. Okay. Attendance, by the way, at the attendance. So once you drop off the Zoom call, the team will be marking your attendance. Don't worry. So everybody who is dropping off after 10 o'clock, your attendance will be marked from the Zoom itself. Okay. Thank you so much, guys. You can thank you. See you tomorrow. Be there at 6:45. I don't want anybody to be late at all tomorrow. 6:45, be there, get in the zone because we start, you know, things off at 7 o'clock sharp. And tomorrow is going to be arguably the best day of the FFA. I can tell you that much.
Yes, guys, thank you so much. And I hope you guys enjoyed today's session. And looking forward to seeing you guys tomorrow. Like Rahul said, the attendance is going to be taken through Zoom. So don't have to worry about it. And yeah, looking forward to seeing each and every one of you tomorrow. Mark your calendar, set up some timer. Don't want you guys to miss out on this. Thank you. Thank you so much. And good night from both Rahul and I. See you guys
All
tomorrow.
right. Thank you, guys. Bye bye. Good night. Bye bye. Bye bye. Good night, everybody.
Recording stopped.